Oops. Good morning, everyone. Good morning, everyone. Good morning, everyone. Whoa. Well, that's a good wake up. That'll wake you up. Good morning, everybody. We have another wonderful day full of chirp wisdom. We're going to hear him speak live at, I believe it's the House. This is day number 2. Day number 2. He was there yesterday answering questions by House members. Basically, in a 2-second kind of summary, in my opinion, it's Chair Powell. Chair Powell does a lot of nothing. He says a lot of nothing. I think he handled himself better than the FOMC meeting, where he was visibly kind of shaking. Definitely the rhetoric was hawkish, and we're about to jump into, as soon as I'm done here, the definitions. People have been asking what is hawkish and dovish. Those are reasonable questions, so we'll go over them quick before Chair Powell speaks. He's going to be on in just about 20 minutes now. Man, my voice. Where was I? Pretty hawkish, talking about raising rates, etc., inflation. Something interesting to me was the level of partisanship. It's sad. It's sad. I don't care what side of the aisle you're on. Crypto doesn't care. Crypto is neutral. It's the ultimate neutral party. And all it was, in my opinion, watching it, the majority of it was just finger pointing, saying, the other party messed this up. They messed this up. This guy messed this up. Nobody cares. Like, we should care, but we shouldn't care right now. We should fix a problem, then we should care. It didn't seem like they were really solution-oriented. It seemed like pretty much both aisles were just trying to get Fed Powell to, like, crap on the other side. And I think he handled himself great. He did a very good job kind of dodging that, not falling into those traps. Honestly, he would make a great politician. I guess kind of a Fed. It's not a politician, but they're pretty close. So as you can see, I have the Chair Powell marker on our Bitcoin chart here. We've got the Dixie pulled up, the dollar selling into this meeting. General warning, guys. I do not recommend trading during Powell speaking. We see high volatility. We see very dangerous conditions for especially leverage trades. I like to kind of just see how it goes, see the rhetoric that's used, and then we can look to take a position potentially after the potential surprises are out of the way. Really quick, let's shout out to our sponsors, Femex and Market Cipher. Check them out, guys. Links in the video description below. Top tier trading tool, Market Cipher. I use it every day here. Femex, we're going to check out our live trades. In just a second, you can get a large deposit bonus if you use my link there. Let's see. Let's look at the trades quick. So, While we were gone, I decided to roll the dice. We have not had a great track record the last few weeks of going long. Maybe no one has. We've been slaying almost every short. I believe we were short in the last episode, perhaps. Maybe that was one before. I don't know. Either way, decided to take a long out, basically just looking at the previous all-time high. We traded all the way up. Oh yeah, we did enter a short 21.6. That was rocking. That was a really rocking position. We were looking to close it at 20. We flipped long. That was a little sketchy. We did trade lower. However, stops weren't hit. I don't think we had these up live. And so we're in not a very big position, but we still are a little bit long. We started with 50 contracts. We're down to 40. I shaved off 10 contracts, 5 at 20,500 and 5 at 20,700. You can't really see them. They're down here. Down here. Not very impressive. Not a lot going on. But the overall gist of it, you can see I have short orders laddered up. And essentially because we're long, these are just going to be take profits. I have those set at 21,000, 21,644. I love playing the same numbers twice. And then a little bit higher, 22.5. At that point, this position will flip from long to short at 22.5, and that's either the smartest play ever or I'm going to get liquidated. We'll find out. I did drop the leverage down to 5x. I wasn't really jiving with like the 20 or 10x we were using. I'm feeling more comfortable here at 5. Let me see anything else of note. What else to update you guys on? We'll go through the Bitcoin chart. We'll go through the dollar chart. Something interesting. I posted this to the Patreon group in Discord, but I did want to share it today with everyone. We follow the max pain price for open interest. On Friday, we have a massive expiration of interest. I believe it's multiple billion dollars. Let me see this. Is it Thursday or Wednesday? I don't know. Today's Thursday, so tomorrow. Tomorrow, massive, massive expiration. We do tend to see some heightened volatility after that. So again, taking a position, I think is higher risk than usual right now. But what's very interesting, expiring June 24th, which is today. No, tomorrow. Expiring June 24th, I guess that's 8 o'clock today. Max Payne price has pulled a little bit of a sneaky on us. Max Payne is up at 29K now. If you aren't familiar with this, essentially Max Payne is the price point where the most people lose money on these expirations. So it isn't an enforced thing. It's not technically important, but what we tend to see in the Bitcoin market is price will usually move towards these Max Payne prices into the expiration. Market likes to wreck people. This is doubly interesting because if we then look to the 25th, we see that the Max Payne price is down at 20,500. That is a huge swing. That's $9,000. It's a $9,000 swing. Roughly a 30% downside. So if we were just following Max Payne, we would expect today to rally, and then tomorrow, or up to like 29,500, and then tomorrow to drop down to 20,500. I don't think that's what's going to happen. So it is going to be interesting, though it is possible because 25th we have that big expiration. I don't think that's what's going to happen. That's a lot of volatility. I would welcome it, but it's definitely something we should have on our radar. Max Payne is saying up today. We'll take a look at what the chart has to say, but these do tend to hold pretty. These tend to hold pretty true. What we could see before the end of the day, and we'll have to keep an eye on it, is just as this moved up. I don't know how well you can see it. It says 29K. Just as this moved up, only a few days ago, this was much lower. This moved up basically overnight to 29,000. What does that mean? That means that more shorts were opened or longs were closed. Strikes and calls. That can still change by the end of today, especially if price gets volatile into this Powell talk. We'll see what happens. I promised you guys some definitions. So hawkish and dovish, you've probably heard these a lot, and it's totally reasonable to not know what they mean because it's just like all the other jargon in trading, bears and bulls. What do those have to do with trading? In reality, nothing. It's just something we use as a term. I think the dove and the hawk is even more gibberish. So let's start with hawkish. We're not going to make this long. What is hawkish? Basically, it is a policymaker or advisor who is predominantly concerned with the potential impact of interest rates as they relate to fiscal policy. Hawks are seen as willing to allow interest rates to rise in order to keep inflation under control. So when we say, will Powell's speech be hawkish? We mean, is he going to say something about either accelerating interest rate hikes or more interest rate hike planned in the future? Dovish, and then of course, is the opposite. And doves tend to support low interest rates and expansion of monetary policy because they value indicators like low unemployment over keeping inflation low. So the reason we ask, is the Fed dovish or hawkish, is in those definitions, you just heard the two. Let's call them the two purposes or the two tasks that the Fed is tasked with. That was redundant. They are tasked with managing unemployment, and we see low interest rates, dovish, low interest rates, and keeping unemployment low, and hawkish being the opposite, keeping interest rates high to control inflation, which is the second task of the Fed, to define monetary policy and specifically measures of inflation. So there you go. There's your little 101, 000, maybe. I don't even know if that was good enough to be a 101. We'll call it a 00. I'm going to pull this up. 1 second. Okay, I'm just popping out the chat. Bear with me. We have a hearty 400 viewers, and Powell and Powell isn't even here yet. That's not bad. Well done. Good to have you guys, especially because we're early. We're not usually on this early. The Powell. Have you guys noticed Powell's becoming like a celebrity? I think I said this last time. He is like in the news, live streaming. Well, it used to be once a month at the FOMC meetings, basically. I'm sure he had more I wasn't aware of. But now it's seemingly every day. And that actually reminds me of something. Yesterday, someone alluded to this. I believe they actually said this word for word, and it hit me how true it really is. They said, basically, Chairman Powell, you are possibly the most powerful person in the world right now. Basically your word, markets all over the world are just leaning and waiting on your word. His ability to move markets is actually pretty wild, and I would say not a good thing, right? We don't want one person to have the ability to basically crash markets. He could easily crash or boom markets by just saying gibberish, whatever it is that he would say, like, I don't know, we're done doing rate hikes, even if they weren't. He could moon markets tomorrow. Or he could say, we're doing 1,000 BPS hike tomorrow, and he could crash markets today. It's a scary situation for someone to have so much responsibility and so much power. And it's doubly weird that now he's like constantly in the public eyes, like live streaming. I think it really shows kind of how desperate the world is right now. Congress is hinging on him, looking for direction, and that's not their job. They don't advise the House or the Senate on those matters. So it's pretty freaking weird. It's pretty weird, man. I don't really know where else going with that. He's just a rock star lately. He's our favorite. You guys love watching him. I love watching him. Yeah, I was pulling up the chat. So let's see. We have 410 watching now, a few more joining. We have, as a reminder, we only have about 14 minutes until he's live, until the Chirpow man is live. So that's right, Justin, Rudy. Guys, smash the like buttons. Subscribe if you haven't subscribed. One, you'll be able to keep up with the content, and I'll shout you out. So those are like the kind of little ones. But two, when you vote in the poll, there is a poll up there. When you chat during the live, when you like the live stream, and when you subscribe, those are all engagement. YouTube heavily weighs engagement. A live stream, when it gets lots of engagement, YouTube says, hey, people are enjoying this. I'll go show this to new people. When people don't engage with a live stream, YouTube says, hey, this is probably a bunch of bots. And so I don't want to show this to real humans. So speaking of which, can we do a little bot check? Can we do a little morning shout out bot check? Basically, if you're here and you're not a bot, even if you're lurking, just put something in chat. Just say hi. Or you can say I'm not a bot, or you could say I'm a bot. You could say someday I want to be a bot. You can say I love Gina because I love Gina. There we go. See, this is a little cheap trick to getting engagement. I like it. But it's good. It helps everything out. It really does make a difference. That is like the whole thing. This matters. It seems like placebo, but YouTube really cares about it. And you guys have seen it. We've had thousands of people watching when our engagement is up. That's right. I love you all. Wahaha, not a bot. Tom is a cheap trick. Mad Professor. That's mean. Your girlfriend is a bot. Giggity giggity. We're all real. What's up, Joel, Bernard, Coins, Woody, J. Edward, Niffy, Lena, LFG. I like that energy. David, my man. How you doing, David? Ty, Michael Landis, Murtaza, M. Jacqua. You're definitely a bot. I feel that. Bot free. Do I see an inverse head and shoulders on the 4 hour? We're going to pull up. We're going to like take a look at the charts here. We still have a little bit of time. Cool shirt. Thank you. If you guys are interested in these shirts, it's by a company called Gamer Sups. In full disclosure, they have sent me many shirts and energy drink stuff. Legally, you have to disclose that. I can find the link somewhere though. They do have cool stuff. I feel like Wafu shirts. They also have like bottle shakers, and they have cool stuff. And I drink their energy drinks every day. Actually, here's the thing that really attracted me to them. They made this. You can't really see it that well because of the light, but they made a Bitcoin shaker, and you can buy on their site with crypto. So I don't know. I'll put the link in the chat once or twice. There you go. If you're interested. You lost 100 bots on Twitter this week. You'll miss them. Coins check. Well, I'll have to subscribe to make up for it. Kelly in the chat from Crypto Jeb. Shout out to Club DeFi. I love Crypto Jeb, man. I drink Bitcoin. That's right. That's right. What's up, Remy? Well, what you looking at my gut for? What you putting in that cheeseburger locker? Feeling bottish. Guten Tag. You're a shirt. That's something a bot would say. Powell has an awesome set of tools to fix this economy. It's interesting because they were kind of alluding to not having the tools yesterday. Like, yesterday was weird, man. I think today's going to be spicy. Powell literally said something along the lines of like, we don't plan to push the economy into a recession, and then basically said we don't have but that's going to happen. Like, we don't plan on it, but we're going to do it. It was very weird. On your short last live. Oh, thank you, Sir William. Thank you. On my short. Yeah, that killed it. We opened at 21,644, closed at 20. That was fire. That was straight fire. Then we went long. Shane Wimmer loves vagina. Good for you, my friend. You're allowed to love whatever you'd like here. Love is love, baby. That's right. Do I have any positions right now? I almost forgot. No, I didn't forget. We went over this earlier in the episode. I'm not going to go too in depth because we kind of went over this already. But yeah, we're currently in a small long. We closed a little bit of it, looking to take some more profits at 21, 21.6, and I'm looking to flip short at 22.54 if we get there. My stop loss is placed just above, like 0.3% above my entry now. So this long is no longer really in risk of a loss. We've had not so much luck with the longs, but this will get stopped out in profit regardless. And I already closed some of the positions, so we've taken a little extra profit. Really would rather be short. Would rather be short right now. Being long has just been very brutal over the last few weeks. You got to get a tattoo at 10 a.m. You look for the Twitter update. Well, I love you, Cliff Shepard. Show us your tattoo when you get back. What's my target for what? Kind of define the targets here. You said cheeseburger while I was eating a cheeseburger. That's because I can see you. Gina does it. It does too. Gina, if you're out there watching, someday, guys, keep smashing the like buttons. This is the only way we're ever going to get Gina. This is the only way. Someday, my goal is to have Gina watch this stream while I'm talking about her and feel very uncomfortable, and then I'll apologize to her because I'm a gentleman and I don't want to make her feel uncomfortable. And it's mostly just a joke, but it's not a joke. It's totally real. I love Gina. I love her. She's my dream gal. Okay. Your girlfriend's gonna pop your waterbed. Uh-oh. I literally do have a water, not a water bed, but a bed with a water element. Hope she doesn't pop it. What's up, Gabriel? Crypto Man, BTC USD, that's what we're looking at. You have a thing on your toenail. Dovish. Who's Gina? Gina's a journalist. She's a journalist that's at the FOMC meetings every month, and she's beautiful and she's smart. And it kind of just started as a joke that, like, I loved her, and I was, like, kind of being silly. And then, like, a few days later, I found out that Gina is married to a woman, and that kind of broke my heart, and I think everyone just loves that. I think it's just, like, a funny story now, right? I don't know, man. Everybody wants to see Gina, and I agree. I want to see it, too. Come on. I love you, Gina. Okay. We only have a few minutes, so the Powell speaks in about 9 minutes. So what we're going to do is we're going to take a peek at the Bitcoin chart today. For the Bitcoin chart, we're going to, this is not June 24th, but it doesn't matter. We're going to just take a peek here quick. We're going to get the little bit of TA out of the way, just base TA. Base day. Okay. With about a week left, we're trading on the monthly above the previous all-time high. On a monthly close above 19.9. Above that previous all-time high, 2017. All of a sudden, we can say the bottom might be in. We have another week. We saw on our strikes and calls on our open interest that Max Payne is looking very low into the end of the month, so we may see that drop back down for the monthly close. We don't know. But if the monthly close is above 20K, that's going to allow us to begin the argument of the bottom could be in. At the moment, we could say it is, but it's really just a guess. If we get a monthly close above the previous all-time high, we can start making that argument. This is backed up by the weekly. The weekly traded down to 17-ish. Last week settled up above 19.9. Wouldn't that be savage? How savage would it be if the bottom wasn't? Like, don't get excited. I'm not saying it is. I don't want people to, like, FOMO, make dumb decisions. But how, like, I don't even know if the word's ironic. How brutal would that be? It's like just under 20K, didn't really make it to anywhere else, and then that's it. And it's like the bears calling for 20K for years, like, would be right, but you know that now they're waiting for 10K and they didn't buy in. I think that, honestly, without hitting 17.1, this is maybe the most overall wrecked price we could bounce from. With that said, we've said this many times on our streams, there's a long way back up. We have such a long way back up before we're out of danger. So we haven't seen much of a bounce at all, really, since November. Even if we bounced into the 30s, that could just continue down. There's a long way to go. I'm not going to feel comfortable until high 40s. At this point, this is kind of like game theory. It's like 150% gain. By that time, buying back in, you're buying very high risk, very low reward. Okay, 3 days for this weekly. I'd like to see it close above again, 19.9. I want to see weeklies and monthlies closing above that previous all-time high. I don't want to see that lost. On the day, this is kind of what I like. I was looking at this while I was making those trades yesterday. Let me see. There it is. Here's what I kind of like. Ready? We had somewhat of a consolidation. We can see an order block. An order block. I'm not going to explain it. We don't have enough time. But I'll show you where that order block is. Bloop. And we'll call it there. Bloop, bloop. Right up here. If you remember from, 10 minutes ago, I said I'm looking to add or flip short at 22.5 because I'm looking for this. Gotta pay attention. We have an order block. We established essentially another order block, but that lost support. We traded down basically in price discovery, and that was bought back up on the day into a bullish engulfing daily candle. Not bad. It didn't go anywhere. Surprising no one, because this market's been brutal. Didn't go anywhere. However, yesterday's sell-off, we did trade very briefly below 19.9. That's where I went long, literally just because that's the yearly open. Should be support. Or not yearly open, the previous all-time high. Worked out. But settled back up above 19.9. And now the daily, again, right here, chilling. What do we think is next? I'm going to say usually I'd be pretty confident, and I would say, we already did 20,700. Never mind. Oh, there we go. That's not Chair Powell. That's Miss Waters, chairman. That's Miss Waters. I don't know who that is. Let's see.
As a reminder to all members, we will conclude today's hearing.
All right, we're going to wait till Chair Powell's on. Finish this off. Here's what would be great for today. Closing the daily above 20,700. That would give us another bullish engulf off of the previous all-time high support. That would be a good look. I don't even have to look at the indicators. Nothing's going to look good. Nothing is going to convince me that we're super bullish. The daily has had waning momentum for many days. We may see that roll over. Miss Waters, I don't care. That may roll over into positive buying momentum. That'd be great to see. That would be the time where we can start saying, hey, maybe the bottom's in. But we aren't there. It's waning, but it's still selling momentum. And we've seen this happen too many times where momentum rolls back, looks to go to the positive, and then gets rejected. It's too early. Money flow on the day did hold the low. I do like that. We were talking about that for many streams. It held the low. Yeah, momentum's coming up. VWAP is a little janky, though. It's hard to get excited, but this typically, when we see this, typically we do see that time frame roll over. We talk about that often. We had a high and we had a lower high, and so we do look for the daily to roll over to positive money flow, and that's when we're looking for a bounce. There it is. Let's go down real low time frame. Interesting. Bitcoin also selling into Chair Powell. We see 4 red hourly candles right now on the Dixie. Only 2 red hourly candles, but this is looking very dumpy. Very dumpy. All right, Ms. Waters, chairman. I do respect you for your... I don't know who you are, but I'm sure you're very smart. I do respect you, but I want to hear Chair Powell speak. I'm here for Chair Powell. All right, got the charts up. You can see it's close to Chair Powell time. I'm going to put up a little poll. I'm going to turn their volume up.
To consumers. Importantly, housing is a key measure and driver of inflation. For too long, we have not addressed the shortfall in our housing supply, and this lack of supply is driving up prices. In 2021, the national median rent for an apartment jumped by almost 18%, and home prices rose by 17%. These are the true drivers of inflation, according to experts.
I literally don't know who this is. Like, I have zero idea.
Despite repeated efforts on the part of Republicans to falsely blame pandemic relief and emergency stimulus as the primary cause. To address housing
That's a pretty good cause of inflation, though, printing trillions.
supply.
But did you hear the partisan stuff? This is what I was complaining about. Stop blaming each other. Wait, is this?
Other inflation drivers, the House passed the Build Back Better Act.
Is this not live, or did they record it, then it goes live? Because what is this?
Our longer run objective of 2%. Demand is strong and bottlenecks and supply constraints.
This is the wrong one. Womp. It's hard to tell because these are so boring. Let me real quick bring up the real one. I don't know how that came up. Fed, Powell, live, in-house. Whoops. That's embarrassing. This is on the Federal Reserve site? Nope. Wow, what a fail. Hey, anybody in Discord who knows where the link is or has the link, can you please message it to me? I'm looking for it. I should find it in like a minute. The Hill? There we go. I was going to say, I didn't think this started yet. There we go. All right. All right. Whoops. Thanks for subscribing. Subscribe to this less than organized show, apparently. Okay. That's good. I was like, I was a little thrown off by that. Like, starting. Should be starting now. My alarm just went off. We say it just turned 10. A little caught me off guard. I was like, what in the hell? What in the heck? All right. 1 second. There we go. Monetary policy and the state of the economy, Bueller. What's up, Fell Sand, my man? Thanks for subscribing, taking the stream's scribe Ginity. Great to have you. Great to have you. Looks like Matt P subscribed, but that was a while ago. Sorry if I missed you, brother. All right, this should now be starting. For realsies this time. For real. That was a test. You all passed the test. Well done. Proud of you. No, it wasn't a test. Google, have you guys noticed that Google search results have gone super downhill? Super downhill. Like, that was the first thing when I typed in like Fed Powell speaks at the House. And it was like Fed Powell live at the House. That's from March, I don't know, like 20 something. There we go, baby. Just so you guys know, this is taking place in room 2128. We can tell by the bottom left here. It's very important information. I don't know. I don't know what that means. I don't know why that'd be important. Okay, so they are starting. Bitcoin. Let's go down to the 1 minute because we love watching the 1 minute charts during these. Chirp. Middle, top. There we go. Chirpow. So, price hasn't moved at all. This is what's interesting to me. The dollar has been eating it, and it's still eating it. With how hawkish Powell's been, it's weird that we're seeing the dollar sell off. Now, we have seen many times, I will say this, we've seen many times a move like this into the start of it, and then by the end of it, it's completely retraced in the other direction, like whipsaw price action. We have seen that more than a few times, so that wouldn't be crazy. But it's weird. The last FOMC meeting, right? When was that? That was the 15th. The 15th, right here. So
the chair
they
is
were
authorized
ultra.
to declare recess of the committee.
There she is again. We'll put her on pause for a second, just to explain this quick. The 15th, right here. This was the FOMC meeting where they were extremely hawkish, and we would expect the dollar to rally. No, we did not. We saw the dollar fall. Very weird, kind of backwards. You can say that the markets have baked it all in. Sure, whatever.
At any
It's
time.
possible.
To adopt
Okay.
a resolution that was made available to all members that names our newest committee member, Mr. Norman, to his subcommittee
Good day, Ms.
assignments.
Waters.
Without objection, it is so ordered.
Okay. Aren't politics exciting? So
This
ordered.
hearing is entitled
Bueller.
Monetary Policy and the State of the Economy. I now recognize myself for 4 minutes to give an opening statement. Welcome back, Chair Powell. And congratulations on your confirmation as Chair of the Fed. Since you last came before the committee, Americans continue to struggle to make ends meet as the price of housing, gas, and groceries have skyrocketed. While it is important for the Fed to fight inflation.
You know what? We're going to pause here because this is a bunch of filler. Something else I wanted to rant about today that is related. I read that the U.S. government's looking into like a tax holiday on gas tax holiday. And oh my God, how are these people in charge? How are these people in charge? That is the stupidest thing I've ever heard. Taxes fight inflation, first of all. And second of all, if you subsidize gas, people just use more of it, then the demand goes up, and now you're stuck in the exact same position you're in, and now you're running at a deeper deficit that money isn't going to infrastructure, roads, maintenance, etc. It's so stupid. And the average person at the pump is going to save, like, I don't know, 16 cents. Like, I'm just making this up. Maybe like $1 or $2 per fill up. It's just so inane. How are these people in charge? That being said, Tom Crown for president.
Has allowed corporate landlords to hike up rent, forcing families to make difficult cuts elsewhere in their budgets. The Fed's interest rate hikes will make borrowing more expensive and thereby could help reduce out-of-control housing prices. But without action by Congress, inflationary pressures will remain because there is simply not enough affordable housing being built.
That's true.
And there won't be until Congress makes necessary investments. That's why it's so important that we pass the housing title of the Build Back Better Act, which provides over $150.
Moving on, I thought she was talking actually about stuff related. I hate that they get into politics. This isn't about politics. For once, can we just focus on making life better for people in the United States? Can we just do that? And I know that speaking from a place of privilege, living in the United States is very lucky, but it just sickens me that they're sitting here facing a major economic event, like a depression, well, definitely a recession. And they're just going to sit here and talk politics like...
Put forth solutions to
fix
tackle
something.
inflation.
Fix something.
But my colleagues across the aisle have consistently voted against every solution. Let me go over some examples. Democrats passed a bill with $28 million
This
in
is all they
funding
do.
to address
No
the
one
baby
cares.
formula shortage, but Republicans voted no. We passed.
We're going to wait. We're going to wait. We don't need bipartisan gibberish, man. Like, pointing the finger doesn't solve problems. Doesn't solve problems. Let's just point the finger. No, it's easier than coming up with adult solutions, pointing the finger. I have an adult solution. Let's print a bunch more money, not worry about inflation, but actually use that money to build things that are productive. Let's build factories. Let's build chip factories. Let's build roads. Let's build affordable housing, as they said. Let's build things that actually make life better. Let's build a new electric grid. Let's build power plants, like nuclear power plants. Let's build solar panels everywhere. Those things will do something. Oh my God. I'm triggered. I'm so sick of politics, man. It's just finger pointing. It's finger pointing with no answers. It's just, all they do now is like, they're just watching for the other person to mess up. Plant weed. If that's legal where you are, yes, exactly. That has a return. Don't mute. Dude, when Powell talks,
and I now recognize the ranking member of the committee, the gentleman from North Carolina, Mr. McHenry, for 4 minutes to give an opening statement. And for those who may have, please get muted so that Mr. McHenry can give his statement.
Thank you, Madam Chair, and thank you, Chairman Powell, for being back with us. A year ago, President Biden tried to buy support by signing into law a $2 trillion stimulus bill.
Here it comes again.
What he did was sell out ordinary Americans.
Smash the likes.
Who are now
subscribe.
repaying all that quote-unquote free money. Inflation is the worst
Good point,
it's been
Tessia.
in 40 years. American families are rethinking their long-awaited summer vacations because they can't afford a $5 a gallon price at the pumps. Costs are spiraling out of control for everything from housing
muted.
and food to airfare, cars, medical care, and clothing. Democrats are still on the hunt for the scapegoat. They blamed oil companies, the war in Ukraine, and supply chain issues in Asia. But let's be clear. It's the Democrats' trillions in wasteful spending that resulted in higher grocery bills and soaring gas prices. President Biden continues to deny that the so-called American Rescue Plan contributed to inflation.
Yeah, that's
recently calling that idea, quote, bizarre. Well, economists across the ideological spectrum, from former Clinton Treasury Secretary Larry Summers to Jason Furman to Michael Strahan, don't think it's bizarre. Even the left-leaning San Francisco Fed found that the American Rescue Plan contributed to price increases. So now millions of Americans need to be rescued from the Democrats' American Rescue Plan. I'm confident Chair Powell is taking this emergency seriously.
If I won 2024.
And as I've said many times before, I think he's the right man for the job, and he is.
Bitcoin
but how the Fed manages the next few months will be as critical as any other period during the last 4 decades.
Just kidding.
No one at the central bank was prepared for prices rising at a clip of 8%.
How weird is it that everyone in crypto knew this would happen, yet everyone's blown away and no one
even
knew?
Core inflation rising and nearly $1 trillion over the last 12 months alone.
What's up, Warthog, Thunderbolt?
Now it seems the
Alexander
previous
Pashov.
predictions by the Open Markets Committee about economic projections are wrong, and they are altering course.
Basic maths and
Simply put, the Fed has its work cut out for it. Lastly, I want to address the left's ongoing efforts to expand the Fed's full mandate. Republicans have been on the record opposing this, and I hope that the skyrocketing inflation unleashed under the Biden administration puts an end to these discussions. The Fed should be focused on price stability. That should be their single-minded focus at this moment in time. It's out of touch for Democrats to keep pushing mission creep at the Fed when American families are struggling to feed themselves and to get work. The Fed is a serious place with serious business to attend to. It needs to focus on the middle class, not the chirping political class. This was true before inflation broke out. It's all the more obvious to today. I hope that Chair Powell will deliver that message to his colleagues throughout the institution. And again, I want to thank Chair Powell for his testimony. Thanks for his willingness to engage with policymakers on the Hill. And thank you for his openness in what has been a more closed-off institution. We have a mess to clean up.
And it's not my fault. That's all I want anyone to know.
I'm glad you're taking your job seriously. And with that, Madam Chair, I yield back.
Thank you.
Both parties are nuts, dude. They're both the same.
I now recognize the chair of the subcommittee on national security, international development, and monetary policy.
They're bought and sold by the same people.
The gentleman from Connecticut, Mr. Himes, for 1 minute to give an opening statement.
Thank you, Madam Chair, and welcome, Chairman Powell. Congratulations on your confirmation. I don't remember a moment as consequential as this one for the Federal Reserve or as potentially testing of its leadership. I think I have to go back to the end of 2008 and the first quarter of 2009 to think of a moment that was quite as important as Americans watched the economy collapse around their ears and their jobs and assets being lost. There is a very real possibility that Americans will be caught in a vice, an economic vice, not of their own making, between inflation, which makes their everyday lives unaffordable, and the possibility, much contemplated by economists, of a recession. Simply put, as one of the last members of Congress to get out of the chamber when it was under attack on January 6, 2021, I don't believe that our democracy can sustain either runaway inflation or another recession. And despite the rhetoric you'll hear all day today here, there's not a lot that we can or will do. Much of this rests on your shoulders. So Chairman Powell, I just ask that as you make your decisions, you think not just of the numbers and the economics, but of the importance of sustaining this nation's democracy.
Thank you, Mr. Himes.
There's no other option.
I now recognize the ranking member of the Subcommittee on National Security, International Development, and Monetary Policy, the gentleman from Kentucky, Mr. Barr, for 1 minute to give an opening statement.
As we face the worst inflation the country has seen in 4 decades, I am encouraged to have Mr. Powell leading our central bank, and I'm hopeful the Fed will rise to the occasion. At the same time, it's important to remember the following. Just last year, Democrats were ignoring inflation warnings to pass a $2 trillion stimulus bill. They were pushing the Fed to solve climate change and social ills, and they flirted with unconventional monetary tools like yield curve control. Today, as gas prices top $5 a gallon, these left-wing ideas seem like a fever dream from an alternative universe. But many Democrats fell for them at the time, and they'll likely pursue them again if inflation subsides. The lesson for the Fed is clear. It needs to focus on doing a limited number of jobs well and not get distracted by those who want it to be all things to all people. Specifically, the Fed should be laser focused on its price stability mandate. And even as you acknowledge the risk of recession and as everyone desires a soft landing, I encourage the Fed to have fortitude.
We're not getting a soft landing.
To prioritize defeating this inflation scourge. Chair Powell, I hope you are hammering this message home at the Fed as ordinary Americans see their paychecks eaten away under Democrat mismanagement of our economy.
Have you guys, it's just
I want to
this.
welcome today's distinguished witness.
They did it.
The
No one
Honorable
cares. It
Jerome
doesn't matter
Powell,
who did it.
Chair of the
Fix
Board
it.
of Governors of the Federal Reserve
Doesn't fix
System.
it.
Without
It triggers me.
objection,
I'm mad
your
about
written
it.
statement will be made part of the record. Chair Powell, you are now recognized for 5 minutes to present your oral testimony.
Oral testimony.
Chairwoman Waters, Ranking Member McHenry, and other members of the committee, I appreciate the opportunity to present the Federal Reserve's semi-annual monetary policy report. And I'll begin with one overarching message. At the Fed, we understand the hardship that high inflation is causing. We are strongly committed to bringing inflation back down, and we're moving expeditiously to do so. We have both the tools we need and the resolve it will take to restore price stability on behalf of American families and businesses. It is essential that we bring inflation down if we are to have a sustained period of strong labor market conditions that benefit all. I will review the current economic situation before turning to monetary policy. Inflation remains well above our longer-run goal of 2%. Over the 12 months ending in April, total PCE prices rose 6.3%. Excluding the volatile food and energy categories, core PCE prices rose 4.9%. The available data for May suggests that the core measure likely held at that pace or eased slightly last month. Aggregate demand is strong, supply constraints have been larger and longer lasting than anticipated, and price pressures have spread to a broad range of goods and services. The surge in prices of crude oil and other commodities that resulted from Russia's invasion of Ukraine is boosting prices for gasoline and fuel and is creating additional upward pressure on inflation. And COVID-19 related lockdowns in China are likely to exacerbate ongoing supply chain disruptions. Over the past year, inflation has also increased rapidly in many foreign economies, as discussed in a box in the June Monetary Policy Report. Overall economic activity edged down in the first quarter as unusually sharp swings in inventories and net exports more than offset continued strong underlying demand. Recent indicators suggest that real GDP growth has picked up this quarter, with consumption spending remaining strong. In contrast, growth in business fixed investment appears to be slowing, and activity in the housing sector looks to be softening, in part reflecting higher mortgage rates. The tightening in financial conditions that we have seen in recent months should continue to temper growth and help bring demand into better balance with supply. The labor market has remained extremely tight, with the unemployment rate near a 50-year low, job vacancies at historic highs, and wage growth elevated. Over the past 3 months, employment rose by an average of 408,000 jobs per month, down from the average pace seen earlier in the year, but still robust. Improvements in labor market conditions have been widespread, including for workers at the lower end of the wage distribution, as well as for African Americans and Hispanics. A box in the June Monetary Policy Report discusses developments in employment and earnings across all major demographic groups. Labor demand is very strong, while labor supply remains subdued, with the labor force participation rate at little
Everyone
change.
subscribe to Crypto Face, the freaking man.
The Fed's monetary policy actions are guided by our mandate to promote maximum employment and price stability for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship, especially on those least able to meet the higher costs of essentials, like food, housing, and transportation. We're highly attentive to the risks that high inflation poses to both sides of our mandate, and we're strongly committed to returning inflation to our 2% objective. Against the backdrop of the rapidly evolving economic environment, our policy has been adapting, and it will continue to do so. With inflation well above our longer-run goal of 2% and an extremely tight labor market, we raised the target range for the federal funds rate at each of our past 3 meetings, resulting in a 1.5 percentage point increase in the target range so far this year. The committee reiterated that it anticipates that ongoing increases in the target range will be appropriate. In May, we announced plans for reducing the size of our balance sheet, and shortly thereafter began the process of significantly reducing our securities.
That's a lie. That's
Financial
a lie.
conditions have been tightening since last fall and have now tightened significantly,
That's a lie.
reflecting both policy actions that we have already taken and anticipated actions. Over coming months, we will be looking for compelling evidence that inflation is moving down, consistent with inflation returning to 2%. We anticipate that ongoing rate increases will be appropriate. The pace of those changes will continue to depend on the incoming data and the evolving outlook for the economy. We will make our decisions meeting by meeting, and we will continue to communicate our thinking as clearly as possible. Our overarching focus is using our tools to bring inflation back down to our 2% goal and to keep longer-term inflation expectations well anchored. Making appropriate monetary policy in this uncertain environment requires a recognition that the economy often evolves in unexpected ways. Inflation has obviously surprised to the upside over the past year, and further surprises could be in store. We therefore will need to be nimble in responding to incoming data and the evolving outlook, and we will strive to avoid adding uncertainty in what is already an extraordinarily challenging and uncertain time. We're highly attentive to inflation risks and determined to take the measures necessary to restore price stability. The American economy is very strong and well-positioned to handle tighter monetary policy. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to your questions.
Oh, God.
Thank you very much, Chairman Powell. Chair Powell, at your Senate confirmation hearing, you were asked about the possibility that inflation is being driven by corporations in concentrated sectors of the economy. You said, and I quote, "That could be right. It could also just be, though, the demand is incredibly strong and that, they're raising prices because they can," quote, unquote. We're all seeing and feeling the effects of inflation on consumer pocketbooks.
Yeah, no, I gotta pause this because I don't care what she has to say. I just remembered that. Yeah, Market Cipher, sign up for Market Cipher. Use it every day. Market Cipher, that blood diamond on the weekly, man, that
is
I didn't want it to play out.
Expected to be even higher in 2020. Corporate greed and consolidation are driving higher and higher prices for consumers above and beyond any inflationary pressures. Just last quarter, Tyson Foods, which sells 1 out of every 5 pounds of meat sold in the United States, claimed that their higher prices are due to rising labor and freight costs. Yet, they still managed to net an additional $500 million in quarterly profits. When it comes to rents, a corporate landlord recently remarked, and I quote, "We have an unprecedented opportunity to really press rents on renewals because the country is highly occupied. And so, where are people going to go? They can't go anywhere. We have a tremendous opportunity to press both on renewing leases for existing residents and to reset market rates, which we've reset numerous times, even this year," end of quote. This kind of blatant profiteering on the backs of hardworking families is simply outrageous. Could you elaborate on the role that corporations play in setting prices and how that is affecting inflationary pressures today? Would you also elaborate on what you meant when you said perhaps corporations are raising prices, quote, because they can?
Sure. So matters of concentration in the economy, represent a series of interesting questions that are largely not settled. For one thing, it is clear that our economy has become more concentrated, largely due to lower levels of formation of smaller businesses. That has happened. It is not at all clear that there's a connection between a more concentrated economy and, for example, inflation. And of course, matters of corporate concentration are outside the jurisdiction of the Fed. Those are for the competition authorities and really not for us to discuss. In terms of why prices are going up, I think a lot of it has been, a lot of the places where prices have gone up quite a bit have been situations where supply is constrained and demand is very strong. And so take cars, for example. The demand for cars went up a great deal during the pandemic. People wanted to ride in cars rather than public transportation, and they wanted to move to the suburbs and things like that. Rates were low. The economy was stronger than people expected. But the companies couldn't really make more cars because they couldn't raise their output because of the lack of semiconductors. So when demand hits fixed
So let's build semiconductor plants. I was just yelling about that earlier.
supply, what happens is prices go up and margins went up. And so I think as the economy returns to normal, we would expect those profit margins to return to more normal levels.
Well, Chairman Powell, the example that I gave of Tyson, who said their prices were rising because of labor and freight costs, and yet they managed to net an additional $500 million quarterly profits.
I apologize. I'm having a hard time hearing your words. I'm sorry.
Okay.
I want him to just go, huh?
The example that I gave of Tyson Foods, and the fact that they said that their prices were rising due to labor and freight costs, yet they managed to net an additional $500 million in quarterly profits. How do you explain that?
I'm not familiar with their profit and loss statement, but I will say, and again, there may be particular industries where there are competition issues. I don't know that. It's really not our focus or our authority.
Well, do you have the opportunity to look at rising costs and identify corporations where they are gaining substantial profits, yet they keep raising their prices? Do you have a way of examining that?
I think we can see that, but I think our job is to keep maximum employment and price stability. So we're not in the business of regulating individual companies.
Subscribe and hit the
or
like button.
determining whether their actions, for example, are anti-competitive or that sort of thing. That's more for elected people and also for the competition authorities. So we do look at that, but again, I think a great deal of the price increases that you saw were a matter of supply being unable to meet demand, and the result was prices moving up. In many cases, that was the story.
Thank you very much. The gentleman from North Carolina.
These people are so clueless. Like, you can just hear it in their voices, these politicians. They're so clueless. They don't even really, I don't think it's like intentional. I don't think they know what they can actually ask him. Like, they keep asking about stuff that he like can't comment on. He can't comment on policy and blah, blah. They just like, I think it's because they just don't even know. They think they like just aren't aware of what he does. That's
Mr. McHenry, who is the ranking member of the
plan and $2 trillion injected into a recovering economy and Democrat policies to keep people out of the workforce for longer than the rest of the Western world also contributed to inflation. So that is a political debate here on Capitol Hill, Chairman Powell, and that is on the political side. What I want to ask you about are the policy tools that you are using. Now, certainly you, as chair of the Fed and the Open Markets Committee, took extraordinary measures in the midst of the pandemic to ensure that we didn't have further contagion, and including extraordinary lending facilities, purchasing securities, keeping the federal funds rate at zero. These were the right tools at the right time.
Jay Lawrence.
On the fiscal side, you had to partner with bipartisan bills to keep our economy afloat during government shutdowns. But like all the good firefighting measures, we should put them away when times change. I want to talk to you as you put these measures away, how you expect the economy to respond. So let's start here. What is your level of commitment to fight inflation?
Well, so It's unconditional, our commitment is. And the
That is
reason
one of his
that,
two tasks.
we need to, in the particular situation, we have a labor market that's sort of unsustainably hot, and we're very far from our inflation target. We really need to restore price stability, get inflation back down to 2%, because without that, we're not going to be able to have a sustained period of maximum employment, where the benefits are spread very widely and where people's wages aren't being eaten up by inflation. Really, it's something that we need to do, we must do, in order to have that kind of a labor market. We'll need to do it.
So as you pull back these emergency measures from COVID and you normalize rates to what they look like sort of in the long run, how do you expect the economy to respond?
So when we raise interest rates, and also to a lesser extent when the balance sheet shrinks, what happens is rates go up across the economy and financial conditions generally tighten. And you can think of it as in interest-sensitive spending is an important place that'll be affected, and that's things like automobiles and other durable goods. If rates are higher, then demand for cars will moderate, will decline a bit. The second channel would be asset prices generally. We don't target any particular asset prices, but higher interest rates tend to bring them down broadly. That tends to mean a little bit less spending out of because people's wealth has perhaps declined a little bit. And the third channel can be the exchange rate, where that also has disinflation effects. So overall, we have these effects on the economy. Our intent, of course, is to bring inflation down to 2% while preserving a strong labor market. As I've mentioned, that has become significantly more challenging with the events of the past few months, particularly the war, which is driving gas prices up and raising energy prices and also food prices and disrupting supply chains further.
So at the same time, you have a massive balance sheet. First begin with mortgage-backed securities. As we have a roll-off of the Fed's balance sheet of mortgage-backed securities, what are expectations for how that affects housing?
So I think what will affect housing is the rate. The housing industry and market are slowing down from a very, very hot pace, and that's partially because of higher mortgage rates. The effects of shrinking the balance sheet will be marginal compared to the effects that we're seeing and expect to continue to see from rates.
Definitely pay your taxes.
Rising mortgage rates.
But what are your expectations and any further announcements? Can we expect further announcements on the assets you hold and the securities you hold? Or are there going to be balance sheet announcements in the coming weeks?
No, I would say this. We have a plan. We've articulated it. The markets are forward-looking. They see it. And the markets are in a good place, I think, understanding what we're going to do. And that's we're going to be allowing these securities to mature and run off our balance sheet at a pace that we've said. And it'll be 90 or 95 billion.
Bow ties are making a comeback.
September
yes.
now, it's about half of that. So that's what we've done, and we expect. The idea is that'll just be
right.
on an ongoing basis in the background, and we think the markets can handle that. Treasury issuance is way down, so we think there will be demand for these securities. The Treasury will then reissue them in whatever form they think is appropriate when it relates to Treasuries. So,
thank you.
The gentleman from New York, Mr. Meeks, who is also the chair of the House Committee on Foreign Affairs, is now recognized for 5 minutes.
Thank you, Madam Chair. Mr. Chair, it's good to see you.
I like this guy already.
And I know you'll hear a lot of probably political stuff going back and forth, but the American public is trying to understand the language of which we're talking today so that we can really understand what inflation is. Fact of the matter is, I just recently was over in Europe. There's inflation in Europe, just like there's inflation here. Although, as I talked to Christine Lagarde and others, they say the cause of the inflation may be different.
That's what they're
So
saying.
the causes are different. They said that maybe demand here, but not a case of demand there.
Yeah, I don't really get that.
To resolve inflation in Europe, for example, I was in Moldova, 30% inflation rate, gas $15 a gallon, Turkey 80%
Yo,
inflation
Jason Casper,
rate,
what's up, my dude?
gas $13 a gallon.
Crypto face and Jason
and I
Casper.
could name places in Europe from Europe to the United
double.
States. Is it that we had, whether it's the supply chains, the China shutdown, complete shutdown, the zero COVID policy, Russia's war in Ukraine, COVID period, isn't just a massive storm
Subscribe
of
to Jason
everything is what
Caspa.
contributes to inflation and causes it all over the world?
Pretty much. Yeah, that's a pretty good description.
It's a little bit of everything, right? So
it's-
if I'm
it's
talking to my
different. It's
a little bit of
constituents,
everything.
trying to explain to them what inflation is and what causes it, I would not single out any one thing. I would probably have to talk about the conglomerate of things, because
not addressing
if
the
you
root
take
problem.
away 2 or 3 of those things, we might not be in the situation here. All of it unprecedented, all of it really out of the control of anyone. We're out of control of Democrats, out of control of Republicans, out of control of the president, out of control of other governments. Is that not correct?
I said I like
Some
this
of it
guy.
is
I
out of
knew
our
it.
control. For example, the price of oil and most of the price of food. And to your point, Europe has much more. It's much more about energy and food prices. Very difficult problems.
Yeah.
And also, they of course have the
You might have done
European
the
Central
conversion,
Bank
though.
has different countries, which and so they have to worry about the difference, the spreads between different countries, and that's a different challenge that we don't have here. We have the difference here for us is we actually have a very strong economy and well-recovered economy, and so more of our inflation is from demand, and we do have tools to deal with demand. That is the place where we actually can work, and that's what we're using our tools.
And some of that was because during the crises that we had to do certain things, stimulus and other things, to make sure that we kept our economy stable. I mean, if without doing those things, we would have been in trouble. So the things that we did going through COVID, the stimulus, trying to make sure people kept their jobs or kept money coming in at the time, was what we had to do. Otherwise, we would have been in worse shape or not have as strong economy as we have now compared to other countries. Is that not correct?
Yes, I would say it this way, that our inflation is a consequence
Cat
of very
Lego?
strong demand, in part driven by supply, by
Subscribe
what
if you
Congress
haven't
did,
subscribed
support
yet.
activity,
Come on.
in part driven by
Come
what we
on.
did, but
We got
also
1,000
But that
viewers.
helped
Let's go.
stabilize our economy at that time, right?
it did.
And if we did not do
that
those
is-
things, our economy may not be as strong as it is right now.
I think that's right.
That's
So
correct.
Our economy
I
is
think
strong.
that's right.
And let me jump to something else real quick, because the one other thing, I know you testified before the Senate yesterday, and what concerned a number of my constituents that I talked to was the question about can we resolve inflation without increasing unemployment? Because our folks are concerned about losing their jobs
Not
and
really,
not
you
being
can't.
able to, it'd be worse if they were unemployed.
Legit.
So my question to you is, can you speak to what the Fed has seen during the last few years with respect to the relationship between unemployment and inflation? And is it possible that we can continue to have a strong labor market while also curbing inflation?
Manic looks
It's
so
certainly
good.
possible that we can. And there is a relationship between unemployment and inflation. The challenge now is that inflation is at a 4-decade high, and some of it we can deal with. Some of it is really going to be dealt with
35%
on
up
global
from
markets, the price
in-stream
of oil
trade.
and that
Let's
kind of
go.
thing. We can't affect those, but the challenge is we're tightening monetary policy, and that's designed to
Dollar.
to drive growth down to a level that's more sustainable and lower, give the supply side a chance to catch up, and give inflation a chance to come down and bring inflation down. That's what we're trying to do. We don't have precision tools, and we raise and lower interest rates. It affects the whole economy through many channels, and so there is a risk that unemployment would move up from what is a historically low level. Though a labor market with 4.1% or 4.3% unemployment is still a very strong labor market. Today's rate is 3.6%, and there are 2 vacancies for every unemployed person. So that's a labor market that's kind of overheated.
We're all a little stupider. That's right, just from listening to this.
The gentlewoman from Missouri, Mrs. Wagner, is now recognized for 5 minutes.
I thank you, Madam Chairwoman. Chair Powell, thank you for joining us
I like that guy's
again
energy.
today.
Knew it right away.
I just want to start by saying how sick and tired I am of the president's inflation blame game.
So
One
I'm going
day
to start
it's
blaming
Putin's fault,
someone else.
Another, it's the oil companies and the meat packers, or perhaps it's corporate greed. Now we're blaming other countries like Estonia, Turkey, Europe. I give you
I'm so tired of people complaining, so I'm going to complain.
my avid assurance that no one in Missouri's 2nd Congressional District give us a rip what the price of gas and groceries are in Europe. They care about what they are at the corner of Manchester Road and Weidman. No one in this administration is willing to accept responsibility
This lady's name
for
is
the dismal
Karen.
economic
Yes.
situation America is in today.
It says Wagner, but it's
Inflation,
Karen.
sir, more than tripled in 2021 from 1.4
in the chat.
to
Where?
7%. And from June to the end of September 2021, inflation hovered, I think, around 5.4%, and then began a steady increase until reaching an historic 8.6% that is now crippling Americans' spending power today. Chair Powell, when inflation remains steady at 5.4% during that period in 2021, what factors played into the Fed's decision to keep rates at nearly zero during each FOMC meeting in June, in July, and in September of 2021, sir?
So during the summer of 2021, just giving us hindsight, inflation was coming down month by month. If you look at monthly readings for CPI or PCE, they were coming down month on month on month through September. And so that I think
She bought Luna.
told us that our thesis
Rip
that this
Karen.
was going to be a passing inflation shock was at least plausible. I think that the data turned pretty hard in October and November, and we very much changed our position, and since then have tightened financial conditions quite significantly. So it was a matter of a few months when we were really looking at this and thinking it's going to be passing. Most macroeconomists thought that it would be a passing thing. It turned out to not have been so far, and so.
But we saw it move from 1.4% to 5.4%. So I don't, we did have a steady period of time. I wouldn't say that it was declining, but I'm just surprised that we weren't moving more quickly at the Fed. I mean, I want to be honest, sir, that the Fed, I think, underestimated actual inflation. What do you think
Everyone
you
knew
missed?
that.
Well, we did underestimate it. With the benefit of
Everyone
hindsight,
knew
clearly
that.
we
Herein.
did. So it comes down to this judgment that we had to make. It has really nothing to do with our framework or anything like that. It was, and every central bank had to make this same judgment, which was looking at the supply chain problems and the shock to labor force participation, millions of people out of the labor force. We had to decide whether that was going to be a lasting thing or whether it would kind of turn around quickly. We had very high levels of labor force participation. Suddenly they're much lower. The
We
thought
had a
was people will
pandemic,
come back.
Karen.
As soon as COVID is over, we have these new vaccines. Every American is going to get vaccinated. We'll be done with COVID by the end of the year. So basically, these supply side issues, broadly speaking, just didn't get better. There were recurring waves, and that was the judgment we had to make. We knew it could be wrong, and I think when it started to look pretty wrong, we pivoted. And
Now,
we
President
pivoted
Biden
pretty hardly, like
continues.
7 months ago.
President Biden continues to say that a recession is not inevitable, as his government agencies, and Dems in Congress continue to spend billions and trillions of taxpayer dollars, burden businesses with costly rules and regulations, and on top of it, the president refuses to unleash American energy independence. The president's policies continue to take inflation-taming options, I think, off the table and hamstring the Fed's ability to focus on price stability. President Biden not only limits the energy production here in America and spends trillions of our taxpayers' money, but he also threatens tax increases and promises to cancel billions in debt. How can you still say, sir, that the Fed has a pathway to a soft landing
They don't.
for the economy?
We all know they don't, Karen. Jeez.
Well, that's our intention is to achieve inflation getting back to 2%, and
With all I've laid
a
out.
strong labor market. I'm sorry.
With all I've laid
solved it.
out,
She
and the
solved
increases you're going to
problem.
have to take.
Yeah. Yeah. What do you know,
So
Powell?
as I mentioned,
I
I
live
think
on
that
Mary,
path has gotten
Mary
more and more
Street.
challenging thanks to
Wagon
the
Road.
effects on oil prices and food prices, really, and also the supply chains from the war in Ukraine. It was never going. We never said
Not
it was
just
going
the
to be
war in
easy.
Ukraine, sir.
Well, it's the rise in energy prices and the rise in, which has been, began in the latest rise from February.
The
to
latest rise. This has been going on for a year and a half. I appreciate the chair's indulgence. I will yield back the balance of my time. Thank
Karen,
you,
were you
Chairman
voicing
Powell.
these concerns
The gentleman
back
from
then?
Texas, Mr. Green,
Oh, no,
who is
you
also
weren't.
the chair of the Subcommittee on Oversight and Investigations, is now recognized for 5 minutes.
Thank you, Madam Chair. Thank you for being here, Chair Powell. I greatly appreciate the opportunity to have a few thoughts with you, share some thoughts. In February of 2021, you indicated that millions of people were out of the labor force, which is what you've said today, millions. And with millions of people out of the labor force, the Biden administration and persons on my side of the aisle sought to do something about that, to help those who were unemployed. The inflation that my colleagues speak of has to do with unemployment, the help that we gave people who were unemployed at the time. Persons who are unemployed,
Red dress lady, where are you?
Chair,
Where's Gina?
they need help. They can't feed their families. Small businesses were screaming for help. We helped small businesses to get through a turbulent time. This was a pandemic. The vaccines had to be distributed and developed. That's a part of that inflation that they're speaking of. People needed rental assistance. People were literally going to be evicted by the millions.
Blame Tom.
But for the assistance from the Biden administration and Congress. We wanted people to go to work. We provided some child care. If you want people to go to work, schools are closed. You got to help people through these turbulent times. They never talk about what the inflationary costs that they speak of really did, how it benefited American people who were suffering. They overlooked that. They weren't going to help, and now, since they didn't help, they're going to say everything that they can to demean the help that was given. No, they didn't vote for it. They don't extend the hand of friendship to people in times of need. So when they don't do that, they have to find a way to denounce the help that was given. It's really shameful. It's painful, and it's sinful to hear people use a term, inflation, to indicate that people who were unemployed shouldn't have received help. The small businesses that were begging for help shouldn't have been helped. Vaccines shouldn't have been distributed. People shouldn't have gotten rental assistance. They shouldn't get child care. Now, I would respect them if they would say these things, that these are things that they opposed.
Right here.
But they're not going to do that. They use one word, inflation. And unfortunately, our messaging to all of the American people has been somewhat lacking. But I want the people that I serve, who pay attention to the supermarket more so than the stock market, to know that when they needed this help, we were there for them. And Mr. Powell, you indicated that there were millions of people out of work in February of last year, just prior to this help being accorded people. I welcome your commentary.
That guy has a weird speaking cadence.
I welcome your commentary.
The way he emphasized.
Sorry, I didn't catch the last part. So, you know, our job is maximum employment and price stability. We did what we did during the pandemic, acute phase and response, and you did what you did.
Dave.
And now we are where we are. And so we have a job to do, and it's very important that we do it, not least because of the people you talk about. The people you talk about are really suffering from inflation now at the grocery store. And the only way we can get back to that, get back to a place where inflation is low again, get inflation back down to 2% and help those people, is by trying to get demand and supply back in balance.
Let me intercede and say this. You said something that I find favor with. You said, we did what we had to do. We did what we had to do. We did what we had to do. We were the adults in the room who did what had to be done. Others who declined to do can now be critical. I yield back.
Sir, thank you very much. The gentleman from Minnesota, Mr. Emmer, is now recognized for 5 minutes.
Who would like to blame the other party?
Thank you, Chairwoman Waters. Thank you for holding this hearing. And thank you, Chair Powell, for your testimony and your time here today. Financial freedom is American freedom. And frankly, Americans do not have the financial and economic freedom they need to invest in themselves, their businesses, and their families. Unfortunately, Americans are too busy making ends meet to focus on anything else. Inflation is running rampant across the United States, with consumer prices rising 8.6% in the past year, the largest price increase since 1981. From fuel to meat to housing, my constituents and all Americans are suffering at the hands of this hidden tax.
These people are
Except it's not so hidden anymore. It's punching Americans in the face, as my friend Mr. Stile put it yesterday. So how did we get here? It's pretty simple. We gave up American energy independence. We locked down our citizens and businesses for nearly 2 years, pumped the economy with well over $5 trillion in what's called stimulus funds. And now, as we recover from the pandemic, we simply do not have the energy resources necessary to meet the increased consumer demand. There's a history of Democrat policies we can point to that put us in this position, from refusing to adopt an all-of-the-above energy strategy to recklessly passing $2 trillion in partisan spending through the American Rescue Plan, despite the fact that nearly $1 trillion of bipartisan relief was unspent. But the bottom line is we need solutions now because inflation is beating up the American people. We have to wake up and realize that we cannot continue these spend-your-way-to-prosperity policies. Every day, inflation threatens the financial security of American families, of our constituents. We need solutions. Let me just return to my point about the spending. In December 2020, we'd authorized nearly $4 trillion in bipartisan COVID relief. Yet just 3 months later, Democrats pushed through another $1.9 trillion with hardly any oversight mechanism included, even though a quarter of all COVID relief remained unspent. When President Biden was recently asked if the $1.9 trillion spending bill caused inflation, he said he didn't think the bill had even a minor impact and called the idea, quote, bizarre.
Dude,
Chair Powell, do you agree with the president's conclusion that the $1.9 trillion that was included in the American so-called rescue plan had not even a minor impact on the inflation we're seeing today?
I'm sorry. I wouldn't comment on what any elected official said, and it's really not up to us to score fiscal interventions.
Again, sir, over again.
Respectfully, I'm not asking you to comment on what the president said. I'm asking you personally. Do you believe that the $1.9 trillion American Rescue Plan did not even have a minor impact on the inflation we're seeing today?
They just want to get him to say something against the other party.
We didn't comment on the CARES Act, and we won't comment on that act. And from that,
it's interesting, sir. Reclaiming. It's interesting, sir, that you won't comment on this, but you were more than willing a year ago to talk about inflation as some transitory something that everyone has acknowledged now. It's going to be here for a while. Even though it seems like the president's Build Back Better package, this massive spending package, is dead on arrival, certain elements might not be dead. Chair Powell, do you have concerns that if Congress injects a new round of stimulus into the current economy, it could, and in fact will, add to the inflation we're seeing today?
Absolutely it will.
Again,
absolutely
really, it's not our role to give you advice on what to do.
Dude,
we report to Congress, not the other way around. We're sticking to our mandate and our mission, and we have a lot of work to do on that front, and not really giving you advice.
The press had way better questions. This shows you how out of touch our elected officials are.
Something that comes to us, and we deal with it as part of everything else.
I don't think they know what the Fed does.
I mean, you are supposed to be in charge of the monetary policy of this country. You're now embarking on raising interest rates because that's the only tool you think you have left. This is not just a dog chasing its tail anymore, sir. This is a dog that's starting to devour its tail and its back end because of the debt that we are carrying. I want to thank you. You acknowledge we're in a bad spot. We're knowingly walking toward an even worse inflation, a recession.
Dude, it is embarrassing as an American that these people are our best and brightest that are making decisions for us.
And God forbid, food
Embarrassing.
shortages. Yet we're relying on old monetary policy tools to keep us from falling off a cliff. Sure, we can raise interest rates over and over, but the only way to curb in a disaster this bad is to raise interest rates to a catastrophic level, or as like Larry Summers suggested, we allow unemployment to go to historical highs. It's not feasible. We need to put ourselves on a strict spending diet. And we have to have strict oversight on the funds that Congress has already allocated to make sure not even one single dollar is going to waste. And we need to put control back in the hands of small businesses on Main Street. Thank you.
The gentleman from Connecticut, Mr. Himes.
It's not his
who is
job to
also the
put
chair of the
small
Subcommittee on National Security, International Development, and Monetary Policy, is now recognized for 5 minutes.
What's up, MST?
Thank you, Madam Chair. And Mr. Chairman, if you'll indulge me 1 minute.
I want to yell about
It's
how the other
important for the
party's
American
bad.
people to understand what's being said here today, because it's being said in other rooms in this building. What the American people are seeing today is something that my Republican Party friends have given over to recently all too
Powell,
often.
this is all your fault.
And that is rank
ours.
dishonesty in the service of acquiring and retaining power. A party without any resilient or discernible principle has stumbled upon inflation.
David
There's
Slater.
inflation all over the world. Germany, Japan, Africa, South America, the United Kingdom. There's inflation all over the world.
Yes, true.
The
Factual.
Republican Party has decided that inflation is Joe Biden's fault, or the American Recovery Plan's
I don't even know what side of the
fault.
aisle he's on, but he's blaming one side
I've
of the
read
aisle.
the monetary policy
Here it comes.
report from start to finish. It gives the Russian invasion of Ukraine, supply chain bottlenecks, high fuel costs, high wage growth. It does not mention Joe Biden or the American Recovery Plan. By the way, the American Recovery Plan is a particularly rank piece of dishonesty. Set aside the fact that it cut childhood.
No one cares. Oh my fucking God. Oh my God. None of this is relevant. What this is literally just politicians going to complain about the other party, trying to get sound bites, trying to get Powell to say something that blames the other party. Like, this is embarrassing, dude.
Childhood poverty in half. As Mr. Green pointed out, if that isn't something
We
to
have real
celebrate and to
problems.
perhaps have the slightest bit of humility as you attack it, I don't know what I can do for you. The American Recovery Plan, as Mr. Emmer pointed out, was about 1/3 to 1/4 of the fiscal efforts that this Congress made on a largely bipartisan effort to lift our economy to the point where it is today. The chairman said strong and well recovered. Unemployment at 3.6%. So many jobs out there that many of them are going unfilled. Did we overshoot? Maybe we did. But the American Recovery Plan, this thing that cut childhood poverty in this country in half, was about 1/4 to 1/3 of the fiscal efforts. The other money was supported by President Trump. But by the way, it's not those dollars that are still sitting in Americans' bank accounts. It's not CARES dollars. No, that was supported by the Republican Party. It's only those dollars in the American Recovery Plan that cut childhood poverty in half. Energy prices. I read the monetary policy report. I'll quote it. Because of the Russian invasion of Ukraine, oil prices rose sharply. I've been around here long enough to know that putting facts and truth out is like spitting into a hurricane, but it's important for the American people to understand that. Mr. Powell, I released yesterday, I hope you got a copy, a white paper on a central bank digital currency. It's offered with humility because we have a lot of issues to work out, but I hope you've had a chance to take at least a quick look at it.
No,
I wonder if you have any reflections, or importantly, what are the next steps now that you've gotten commentary from lots of people? What's the next steps with
CBDC
respect to the
talk.
Federal Reserve thinking about a CBDC?
Finally.
So I did have it. I printed it out. I have it here. I have not had a chance to read it carefully, obviously, given all that's going on. But no, I think
Turn it down a wee, but
generally,
he just talking
we're
about
doing a great
CBDC.
deal of
This is
work.
important.
The president signed an executive order, and administration, parts of the administration are working on this. I think it's something we really need to explore as a country. It should not be a partisan thing. It's a very important potential financial innovation that will affect all Americans. And our plan is to work on both the policy side and the technological side in coming years, and come to Congress with a recommendation at some point. And we don't prejudge what that would be. I know your views are very positive on it. But I think one thing I did see in your report was the beginnings of thinking about how Congress might authorize it, and I do think that's a very, very important aspect of this. And it's great to have Congress starting to think about that.
Thank you. I think I agree with that, and I think that has bipartisan support. In my remaining minute, I'm going to ask you a question I ask you a lot, Mr. Chairman. We're obviously seeing pretty dramatic swings in the financial markets. Money is no longer free. We're seeing that in the SPAC market, the high yield market, the equity markets, cryptocurrency. In my very short remaining time, Mr. Chairman, what should we be focused on? What is concerning you with respect to systemic risk that may develop in the face of rising rates and rising inflation?
So,
Cryptocurrency.
Basically, the financial markets have been functioning well, and the banking system in particular is very strong, well capitalized, lots of liquidity, better understanding and management of its risks. The place where there have been issues, and we don't see them elevated at this point, has been illiquidity in some markets relative to where it had been historically. But
any markets in particular where you worry about illiquidity?
Bitcoin.
No, I wouldn't say that we're seeing anything that's particularly concerning. But I think sort of systematically, liquidity in the Treasury market has come down from where it was, and we've been looking for some time at ways to address that. But the markets are clearly functioning reasonably well.
Thank you. My time has expired.
Thank you.
No,
The
bring that
gentleman
guy
from
back.
North Carolina,
Bring that guy back. He's the only one with the goddamn real question.
Mr. Budd, is now recognized for 5
Mr.
minutes.
Bud. All right.
Thank the chair. Chairman, thank you again for being here. According to the Congressional Budget Office, the federal government will spend an average of $545 billion per year, which was the estimate before rates went up. And these are on interest payments on the $31 trillion of national debt. So that's $545 billion is more than we spend on the Department of Veterans Affairs. So given that the national debt is currently at about 125% of GDP, with the Fed's commitment to tackle inflation, would that be limited by rising interest rates, making the servicing of the national debt even more expensive?
No, absolutely not.
Explain that.
No, we're not in a situation where we need to consider fiscal questions like that. The U.S. is on an unsustainable fiscal path, meaning the debt is growing faster than the economy, but it's not in an unsustainable position. We can service our debt, and the markets understand that, and we can conduct our policy without thinking about questions of fiscal sustainability, and we do.
When your colleague, Secretary Yellen, was before this committee, she told me that federal debt, which was then about 105% of GDP, she said, quote, "That's not a number that I think is fiscally irresponsible." She also went on to say, quote, "If interest rates are zero, we could substantially have a higher debt burden." And in the formula in the following questions, she alluded to Japan and the fact that it could be about double of where we are now, meaning about $60 trillion of debt if you use her math. So do you agree with Secretary Yellen that having a national debt of over 100% of GDP is fiscally responsible, given that interest rates can change and that historically low interest rates can't always be expected?
I guess I would say it this way. We're not on a sustainable path, and we haven't been for some time. And that means that simply the debt's growing faster than the economy. By definition, that is unsustainable. There will be a point at which it becomes a problem of servicing the debt. We're not at that point. We're not close to that point. But we will need to get back where revenues and spending are better aligned. We don't need to pay the debt down. We just need to have the economy growing as fast or faster than the economy over a long period of time, and we must do that. I wouldn't say any particular level. There is no level that I can point to where there's a lot of science behind it being a problem, but we know that the path is not sustainable.
It's interesting that you allude to growth being part of the solution. I want to talk about regulation for a minute, particularly since the Biden administration delayed oil and gas lease sales again this week due to environmental protests. So if we pursued policies to increase American energy production by approving more leases and building more pipelines to transfer that energy and cut down on regulatory barriers to make it easier for folks to produce energy and produce anything, wouldn't that make a real impact on energy prices and inflation in general without us needing to use the Fed to slow the economy with monetary policy to deal with inflation?
So these questions of the whole set of questions around energy are really questions for elected people. We don't have a mandate.
Stop
there.
asking me these
Obviously,
questions.
The more supply there is, the price of something can go down. But these are trade-offs that you really have to weigh as elected officials, rather than.
I'll narrow
not
it
doing
just for
your
a minute.
job for you.
Do you believe that the vast amount of regulation is
You can't
an impediment
answer that.
to economic growth?
I will say this: we try hard at the Fed to weigh the costs and benefits of regulation, and we do think it's important to think about it that way, because there are benefits to regulation, but there are costs, and we don't want the costs to be any higher than they need to be, because that does weigh on economic activity. Yes.
I mean, when you talk about somebody trying to buy a home and now they're questioning it because of the rise in mortgage rates, and then I hear for years that the 25% of the cost of a new home is due to regulation at some level. So that's the point I'm trying to make, is that we need to be very cautious with our regulations, because a lot of
Thanks for
it's
making that
constraining our
point, dude.
growth, and the growth ultimately which solves this fiscal problem. So the point I'm trying to make is that we
That's your job. That's your job. It's not his job.
have much better tools like deregulation, which can free up supply, rather than just monetary policy. And freeing up supply could largely solve the inflation problem for hardworking Americans and not send us into a recession. So again, I thank you for being
This guy's
here.
got all the answers.
Chairwoman, I yield back.
Dude, I need a
Thank
drink
you.
after this. It's like 10 a.m.
The gentlewoman from Iowa, Mrs. Axney, who is also the vice chair of the Subcommittee on Housing, Community Development, and
Philip.
Insurance, is now recognized for 5 minutes.
Thank you, Chairwoman, and thank you, Chair Powell, for being here. It's good to see you. We've been talking inflation, of course. We know it's hurting Iowa families and families across the country, and all of us here have an absolute responsibility to address this. And I appreciate the comments of my colleague, Representative Himes, because I've sure heard a lot of talk about how bad inflation is from my colleagues over there on the other side of the aisle, but I sure haven't heard much about the solutions that they want to provide. So I'm here to work on those solutions, and I'm glad to have you here to talk with us about that. We actually need to reduce inflation, and we've got to figure out what's driving it. So the San Francisco Federal Reserve Bank just put out some research yesterday looking at how much inflation was driven by supply versus demand. What they found was that supply factors are responsible for more than half of the current level of inflation. And of course, I don't need to tell you that while prices increasing are hurting people across a heck of a lot of sectors, gas prices have really been driven up over the last few months. So, Chair Powell, on gas prices, could you talk about some of the supply constraints that have pushed gas and energy prices higher recently?
Sure.
Stimulate, baby.
You know, two big things would be, just one, the price of oil is set globally, and
These people are idiots.
And that's one, so we just take that price. And the second piece of it is the spread that refiners earn. So if refinery is at capacity and spreads are high, then you have a high spread there. And we know that the price of oil went up quite a bit. Started going up early in the year, and it's now come down a little bit in the last week or so. But those are the two things that have contributed to the spike in gas prices that we saw. We did see gas prices moving up, but they really moved up quite sharply beginning in the early parts of this year as the war came into focus.
Thank you. So you talked about, a couple of pieces where folks are making more money, and you talked about the refining process and that crack spread, and I think they're around $60 right now. So basically what's happening is they're making more money because supply is down. So would you agree that increasing the supply of gas could meaningfully lower prices?
I'd say it's hard to argue with that. Sure.
Okay. Well, the U.S. hasn't built a major refinery since 1977. So, of course, as we know, this isn't a recent issue. It's a long-term lack of investment. And so with so many parts of our economy, and you actually touched on that earlier. Now, here's the question I'd like to ask you. Will raising interest rates help increase supply here with fuel? And are there other economic tools to do that?
No, we can't have any effect on the price of oil or certainly the supply of energy. And the tools are in the hands; they're not in our hands.
Okay, thank you for pointing that out. So I know that the Fed absolutely wants to play a role in bringing inflation down, but I want to make sure that we are looking at those solutions and trying to understand what better tools we have. Are there better options out there that you could suggest right here?
Honestly, we're an agency with a narrow but important mandate and a set of tools.
How
and our
many
focus is
times
on
does he
using
have
our
to
tools.
say it?
We think there's a job to do on demand, and I don't see us giving advice to Congress or other agencies on how they might use their tools.
Oh my God.
Okay, well, I appreciate
What
that,
if you
and
could?
hopefully at some other time we can talk a little bit further about that.
What if
I
you
want to
could,
move
then?
on to housing here as well. In the 2010s, we saw less homes built than each of the previous 4 decades, and we're more than 5 million homes short of where we should be. Boy, do I see that all over Iowa, in small towns in particular as well. I've talked to businesses that want to expand, but they can't do so because there are not enough houses there. And so housing is one of the most sensitive areas relative to interest rates. So I want to ask the same thing here. Will raising interest rates help supply there? And are there other tools that we should be looking at to do that?
So I would agree with you. There's a problem with longer-term housing supply and the difficulty of creating adequate housing. What our tools can do is they can, in the near term and medium term, they can restore a better balance between demand and supply in the housing market. You've had extraordinarily high housing price increases really across the country over the last couple of years, and that's because of a lot of demand and very low rates. And you're seeing the housing sector slow down to some extent because of higher mortgage rates now.
And so do you have anything that we should be on our radar or that we could be looking to do to assist with this?
I'd assume no one's asked you
I do think
this
that
yet.
these are issues for Congress around housing supply. If you talk
But
to
could you
builders,
tell
and
us
we do
how to
talk
do
to
that?
builders, we had a group in last week. They will talk about the longer term issues: lack of supply of lots, lack of workers, lack of appropriate zoning and things like that. I mean, these are national issues.
Thank you.
Thank you so much.
The gentleman
Could you
from
tell us how to do
Indiana,
our job,
Mr.
though?
Hollingsworth, is now recognized for 5 minutes.
Morning, it's a pleasure to speak with you again. Before we get started on my questions, I just wanted to comment on Representative Axney's testimony or conversation.
Real quick, thanks for subscribing, Malik, Car K, Clays, David Slater. I think I got you. If you're sitting there, you haven't hit the like button, you haven't hit the subscribe button, do it now. Join us, jump in the Discord.
Or questions. I love the fact that she's beginning to recognize how heavy the regulatory burden has been in the refining space that has led to an underinvestment, and the Biden war on energy, especially on American produced energy, continues to bear the fruit that they expected. And that
Are you
is
saying
a
it's
deep
the other
concern
party's
for
fault?
Americans that are paying more at the pump. We collectively find ourselves in the present situation because we fail to anticipate the future, even if that future is inherently uncertain and probabilistic. You said a few moments ago, we have a job to do on demand. I like that. And in the recent past and present, the policy signals I feel like have been unambiguous for the Fed. Inflation's at a 40-year high. The labor market is robust. Unemployment bouncing along multi-decade lows. Economic growth has been very high. But I worry that lucidity is a luxury that is fleeting. I believe the future will be more ambiguous as we head into a time where economic growth seems to be approximately zero and labor market weakness is beginning to emerge. I think those policy signals will be less clear going forward. Economic growth in Q1 was negative, albeit for reasons I think you called technical in nature, but still negative nonetheless. Q2 economic growth is currently projected to be approximately zero according to the GDP Now tracker and many economists. Weakness in the labor market, while nascent, is beginning to emerge. Still yet, inflation as a lagging indicator remains, as you put earlier this week, very, very high. I've certainly praised the Fed's tardy yet sudden total focus on price stability, which will come, as you said, at the cost of aggregate demand reduction. Technical reasons or not, America will feel aggregate demand reduction where GDP growth is already zero as a recession. So I am curious to hear your thought process in an environment where inflation is steadying or coming down, but still yet at multiples of your target, and unemployment is escalating quickly and economic growth is negative.
Fair
Tell me
enough,
a little bit
James.
about how you'll think about that environment and approach that from a policy.
This is nowhere near as good as the FOMC meetings. This sucks. Like, just being real, this sucks. It should be over soon. We're going to try to power through it.
Policy and rate setting perspective.
I guess I'd start by saying that that's not the environment we see or expect. We actually do think that growth this year, in the second half of this year, should still be fairly strong. It is coming down from the very high reopening levels of last year, but the first quarter was somewhat anomalous. Private spending was actually at a very healthy
Tell me
level.
about how you'll think about that environment. I assume that you could be correct, but there's a chance you could be incorrect about that soft landing prediction.
So the way our tools work, what we're trying to achieve is to have a moderation in demand so that supply can catch up, and so that'll take pressure off of resource utilization, and inflation can come down. That's what we're trying to achieve.
But
I just
inflation
keep
will
saying
come down
right.
after that fact.
But I don't think he really
Demand will come
knows.
down first. Inflation will lag that, where inflation remains
That's right.
multiples of your target, but unemployment, because of that sagging demand, goes up. Economic growth is depressed because of that sagging demand. Tell me how you'll think about that environment.
So the way we think about it from a policy standpoint is we're
keeps
of course,
repeating.
we raise interest rates and shrink the balance sheet. That affects broad financial conditions,
Indeed.
and that affects the economy. So
Indeed.
the question we'll be asking is our policy rate, that's the thing we control, is it at the right level so that it's affecting financial conditions in the economy in the way that we need and intend? And
I want to know how you will intend to affect them where unemployment is going up and economic growth is negative, but inflation remains high.
I think you would, in that hypothetical situation, I think you would say that would be a setting in which inflation could be expected to come down. As I've said, we'd like to see inflation coming down as well. Right. So the question is, you've got
So
choices.
you could move rates down or steady rate escalations in advance of inflation hitting your target, as long as you saw it beginning to come down, if economic conditions or your other mandate, full employment, begin to show weakness.
As one of my colleagues used to say, at every meeting, it's the same question. Do you raise, leave them the same, or bring them down rates, right? So I think, I think we'd have to see what's happening. We'll try to make good judgments in real time. Right. But the main thing is we can't fail on this. We really have to get inflation down to 2%. So we're going to want to see evidence that it really is coming down before we declare any kind of victory. And so I think we'd be reluctant to cut.
Well, this will have real cost to Americans, so I want to make sure that we're forward thinking about what is going on in the real economy, not just watching a lagging indicator that is inflation. And with that, I'll yield back.
I need future indicators.
The
I
gentleman
need to know
from
what's
New
going to happen
Jersey,
in the
Mr.
future.
Gottheimer, who's also the vice chair of the subcommittee, National Security, International Development, and Monetary Policy, is now recognized for 5 minutes.
Thank you, Madam Chairwoman. Mr. Chairman, the most recent Consumer Price Index report indicated that the largest component of the CPI, shelter owned and rented, has increased 5.5% since last year. Estimates I've seen show apartment rental costs up 15% or more over the last year. Do you believe the CPI measure of shelter costs understates the actual increase in housing costs? And do you have any suggestions for actions Congress can take to lower housing costs for Americans in the short and long term?
Make houses free.
There's some sense in which it might understate costs because it's not capturing leases that haven't turned over yet, right? So it's really looking at leases that are turning over.
So probably it's a higher rate.
Overall, we think it's a decent measure. It also remember that in the CPI, housing services has a weight that's double in the measure that we look at personal consumption expenditure inflation. We think that's a better, more sophisticated, a better representation of the inflation that's actually happening in people's lives. So we would tend to look at that.
Thank you, Mr. Chairman. I do want to shift to another issue that's covered in your June report.
Can you agree that it's the other party's fault?
And have long warned that a run on stablecoin has the potential to stabilize financial markets. My concerns were realized in part last month when the so-called stablecoin terror collapsed. Your report highlighted the danger of that event and called for congressional action to protect consumers and financial markets. My draft legislation, the Stablecoin Innovation and Protection Act, would establish a definition and requirements for qualified stablecoin and define as cryptocurrencies redeemable one-to-one for U.S. dollars. This legislation would reduce financial instability in the markets and protect consumers and support innovation in fintech. It would create also a pathway for banks and non-banks to acquire qualified status for the stablecoins they issue. With federal oversight, do you believe non-bank entities can be reliable issuers of qualified stablecoins if they can prove they are fully backed by cash or cash equivalents?
So as you know, we've recommended that Congress look at this, and there are many approaches, including yours. The President's Working Group did recommend that stablecoins be issued by insured depository institutions. I think it's great that Congress is looking at different approaches and evaluating those questions. What you really want, though, is you want to be sure that those entities are appropriately regulated, and in our view, in some sense, at the federal level. So, but I think it's that's going to be a question for Congress. You know what the PWG came up with, but I think there are different approaches.
Do you have any views on who the primary regulator should be at all? You think that's all up to Congress? Like would the OCC being a problem with the OCC being a primary regulator?
You're asking a non-governmental
for
body.
National bank charters, yes, but I mean, the thing is, stable coins are used now principally in the capital markets, as you know, around the platforms, the digital finance platforms, and that's more in the bailiwick of the SEC. If there were going to be payment stable coins, we should be involved, and if it's going to be about banks getting involved, it'll be the banking regulator. So I think it's going to be. We're blessed by a plethora of regulatory agencies in the financial sector, so that'll need to be sorted out.
Do you think that's something, given the challenges we've had in the last months, that's something we have to move quickly on? Are you concerned with how long it's taking Congress to actually act there?
I think it's very important. It's no different than any other big technological innovation. Airplanes, for example, there comes a point at which a new regulatory framework is needed to protect the public and create, preserve innovation and competition, foster, support all that. But that time is coming for digital finance, and I think I'm encouraged that there are now a bunch of bills and proposals, and that Congress is working on this. I think it's important that it get done quickly, because as we've seen, these companies can grow really quickly, and we've also seen that they can have reverses as well.
Real quick pause. You guys notice how literally this entire thing has just been cross-aisle finger pointing. They're just trying to get Powell to say, the left or the right is bad, and so they're just trying to use this crap in midterms. It's been a bunch of nothing. There's been 2 real questions asked. They've both been about cryptocurrency. Draw your own conclusions.
And you think overall the ideal role of the Fed in overseeing stable coins is what? What ultimately you think long term? What's the role of the Fed?
Well, so the one question is around CBDCs, right? Is do we want a private stablecoin to wind up being the digital dollar? And I think the answer is no. If we're going to have a digital dollar, it should be done by us. We don't know that we need a digital dollar as such yet, but I think that it should be government guaranteed money, not private money that is really created for the benefit of the private issuer. So that's one thing. I think also we're very important in payments. So anything to do with payments that the public is involved in, we should be involved in that too.
Thank you so much. I yield back. Thank you.
Do my job for me, Mr. Chirpow. Mr. Chirpow, will you be my dad,
Thank you
Mr.
very much.
Chirpow?
The gentleman from Tennessee, Mr. Rose, is now recognized for 5 minutes.
Thank you, Chairwoman Waters and Ranking Member McHenry, for holding the hearing today, and thank you, Chair Powell, for being here with us. A few moments ago,
should have had a
Mr.
drinking
Himes
game.
noted that the American Recovery Plan, I think he meant American Rescue Plan, is not mentioned in the Monetary Policy Report. Chair Powell, is it Federal Reserve practice to comment on bills passed by Congress in the Monetary Policy Report?
No.
No.
A question that we
I love
obviously
that.
talked
No.
a lot about today already. You have inflation and rising prices on things like food and fuel are having a devastating impact on people all across Middle Tennessee and indeed across the country. You have told us that you will not comment on fiscal policy, but you have also previously urged Congress to support fiscal spending, some of which caused this inflation, in my view. Democrats are still pushing a reckless spending proposal, although reports are that it will be smaller than the one they tried to ram through Congress late last year. So, Chair Powell, will you commit to pushing back as strongly against reckless spending proposals?
Here it comes again, the exact same bullshit. Next time we're going to have a drinking game. Every time they say, Chirpow, we take a shot.
That would exacerbate the current inflation as much as you push Congress to support more fiscal spending during the pandemic?
So I didn't support any particular bill, but I did say that there was more to be done. And I, by the way, I completely ended that practice at the end of 2020. 20. Was it 20 or 21? Anyway, 2020, I completely stopped talking about that publicly at all. And the reason I did it before was, first of all, I was being encouraged by leadership on both sides of the Hill in both parties. They were asking me for ideas. Don't you think we need to do something more? Can you help us? That kind of thing. But that's all done. That's over with. And the Fed should not play or seek to play a role in fiscal policy. We have our own mandate. We sure need to stick to that now.
In light of that statement, would you agree with this statement that the analysis that the Fed had through much of last year and that the administration to some extent continues to advance, with respect to inflation and the policy prescriptions has proven to be far more transitory than the inflation itself?
Well, if I understand your question, we did think that these were going to be passing forces. We thought that these shocks that we're hitting, supply-side shocks, we thought they would be like oil shocks have been, where they come and go, and other supply-side shocks, commodity shocks of various kinds. As the course of 2021 went on, it became increasingly clear, particularly in the fall, that wasn't going to be the case. We weren't going to see that kind of progress, and we pivoted, 7 months ago now. We pivoted to address this with our policy tools. I think our judgment in real time proved to be incorrect, but it was not an irrational judgment, and it was one that was very widely held at the time by other central banks and economists generally. But it wasn't about economics. It was, how long is this going to last? Are these things that are happening to our economy, which are unprecedented, are they going to get better? Like, for example, millions of people dropping out of the labor force, or the problems we have with the global supply chains. There was no model of that. We can't look at the last 20 times it happened. So that's, for sure, in hindsight, it was not transitory.
Thank you. The Committee for a Responsible Federal Budget estimated that canceling federal student loan debt held by Americans could increase the inflation rate as much as 0.5 percentage point and would add $1.6 trillion to the national debt. This estimate notably also did not incorporate the possible effect that student debt cancellation would have on increased college tuition prices. Chair Powell, has the Fed done any analysis on the inflationary impact of these proposals to forgive student loans being actively considered by congressional Democrats in the administration?
Not that I know of. We would look to CBO and legislation. We tend to start to put it in our models of the economy when we think there's really likely going to be legislation.
Generally, though, would you expect forgiving $1.6 trillion in debt, whether it's student loan debt or credit card debt, to have an inflationary impact?
Well, I'm going to leave that to CBO. And also the Congressional, the Office of Management and Budget. We just routinely do not score congressional proposals. It would get us involved in political things.
That's terrible posture.
Why would we be independent?
Look at the difference between my shoulders, his shoulders.
To be independent, we need to be out of these very difficult fiscal issues, which are really your job.
Thank you, Chair Powell. I yield back.
Thank you. The gentlewoman from Massachusetts, Ms. Presley, is now recognized for 5 minutes.
Thank you, Madam Chair. Chairman Powell, without question, the Fed has a role to play in healing our economy. But as with any treatment, the wrong medication can cause even more harm and make the patient more ill. Chairman Powell, at your latest press conference, you stated, quote, wages are not principally responsible for the inflation we are seeing, end quote. I certainly agree with that assessment, as do many economists. Considering that wages are not driving inflation, why is the Fed addressing inflation with tools which primarily impact wages, such as interest rates?
Well, our tools principally impact inflation, not necessarily wage inflation. So our job is price inflation. But I will say on wage inflation, the issue is that over time, wages are really very important. Over time, looking forward, are very important, particularly for service companies where most of the costs are really in wages. And wages, we all love to see big wage increases, but these increases that have been having, some of them are just substantially bigger than would be consistent with 2% inflation.
Thank you. Well, throughout today's hearing, to that point, you've indicated that the Fed doesn't have more precise tools at your disposal. Chairman, the root causes of the inflation we are seeing are supply chain disruptions outside of the Fed's control, whether it's COVID-19 lockdowns in China or the Russia-Ukraine war, which is why this knee-jerk response to raise interest rates is so alarming. The Fed cannot control the factors causing inflation, but this policy choice would plunge millions of people back into unemployment, dampen wage growth, and tip the economy into a recession. There's an old adage, Chairman Powell, if all you have is a hammer, everything looks like a nail. You've recently said that the Fed's tools, like interest rates and the balance sheet, are famously blunt and lack precision. So in that case, do you agree that the Fed needs new tools that are more precise to better fulfill its statutory mandate of price stability and to maximize employment?
No, I don't think we're looking for new tools. I would just say that a big part of the inflation that's happening is really not going to be affected by tools, but a big part of it is going to be affected by our tools, and that's the part that's related to demand.
Mr. Chairman, but by your own account, you stated on the record that the Fed's current tools are ill-suited to deal with the inflation we are seeing. So perhaps now is the time to expand the Fed's toolkit to meet the unique moment that we find ourselves in. For example, one tool that could help the Fed tailor a more precise response to inflation is direct credit regulation. This would allow the Fed to regulate the availability of credit in the specific sectors of the economy experiencing high inflation without impacting other sectors. Would you support Congress passing legislation to give the Fed more precise tools to tackle inflation, such as this idea?
That's not something we would seek. Of course, it's up to Congress to make those decisions, though.
But
what if
your
it
own
wasn't?
admission, your tools are too blunt and not precise enough.
What if it was? What if
additional
you could do it?
tools do you believe the Fed needs to respond more precisely to inflation?
Well, again, our tools are they're blunt, but they are
Govern
the
me,
right
baby.
tools to deal with broad aggregate demand, and that is a more important determinant of inflation than energy and food prices. As painful as energy and food prices are, the bigger piece of it is related to demand. We can't help with energy and food prices, to your point, but we can help with aggregate demand, and we do that through the tools we have. We're not seeking a deeper involvement in the economy like you're talking about, but again, that's a question for Congress. Congress can change our toolkit or our mandate.
Well, in this moment of overlapping crises from supply chain disruptions to high inflation, I do believe we need precise policies that respond to the needs of the American people. The Fed knows that raising interest rates will not address the root causes of rising prices, but they will just keep doing so, even at the cost of millions of working class people's livelihoods. We need a more sophisticated toolkit for the era we are in to truly heal our economy and tackle inflation responsibly.
That might be true.
Thank you.
That might be true, but I don't think anyone knows what tools that would be then. Like, not even a criticism of her. I think the Fed does need new tools. But what would they be?
The gentleman
I don't
from
know.
Wisconsin, Mr. Stein,
Digital monies.
is now recognized for 5 minutes.
Thank you, Madam Chairwoman.
About
Thank you
it.
for being here, Chair Powell. Appreciate it. Just a point of clarification.
Mr.
You noted that you ended your public statements in support of fiscal stimulus by the end of 2020. Is that correct?
Yes.
And so it'd be after that that the Democrats under one-party control passed $1.9 trillion
The
of
liberal
additional fiscal
Republicans.
stimulus after it had already stopped making public statements in support
The other people.
of additional fiscal stimulus. I have the timeline correct?
Yeah, I mean, again,
I'm not asking you to opine. I just wanted to make sure I had the timeline correct.
I'm not asking you, but I did
no
ask you a
position
question.
publicly or privately, and neither should the Fed chair do so.
Understood, but your public statements in support of additional fiscal stimulus ended in 2020. The Democrats under one-party control passed $1.9 trillion of fiscal stimulus.
Oh my God,
after
shut
that period of
up.
time. I just want to
The
make sure of the
Republicans,
timeline.
the
I understand.
Democrats, the
Let me
Republicans.
cognizant
None
of
of this
the time
has to
we
do
have,
with inflation.
and you've noted that you think the Fed should not play a role in fiscal policy. I have grave concerns of the fiscal policy that we've seen playing out in Washington. Not asking you to opine on that. Looking at 2021, we saw real GDP growth about 5.6% in that year. Is that correct?
Yes.
Oh
over
my God.
5%. A reasonably robust rate. At that period of time, in the year of 2021, we saw the Fed's balance sheet increase by about $1.5 trillion. Is that correct?
Sounds about right.
So at the period of time where we were seeing reasonably robust economic growth, the Federal Reserve was continuing to build its balance sheet to a tune of $1.5 trillion. And so during the year 2021, the Federal Reserve ultimately purchased about 54% of all federal debt issued by the Treasury. Is that accurate?
I don't know that.
I have no idea. I have no idea, dude. You're badgering
I think
me.
it's worthwhile. Roughly half of the federal debt that was issued in 2021 was acquired by the Fed and placed on the Federal Reserve's balance sheet. My concern is that that hid the real cost of borrowing that was being driven by the Biden administration at that time. And my concern is that the Federal Reserve, by increasing their balance sheet by $1.5 trillion at a period of time when Democrats put forward a gigantic stimulus package, after you had stopped your public calls for requesting additional fiscal stimulus, that's all part of the problem. It's both the fiscal policy and the monetary policy coming together. But let me keep going here for a moment.
I would like to blame the other party.
The federal government, paid in debt payments last year $580 billion. Is that correct?
I don't know.
That's the numbers I have. It's about 5.8%
Shiba Inu's
fiscal side. And the projections of CBO interest over the next decade, one of the CBO projects that it will triple to $1.2 trillion. But that's assuming federal debt remains in a range of 2.4% to 3.8%. That's the CBO's projections to get to debt payments increasing to $1.2 trillion by the end of the decade. But we're sitting here at a period of time when the 10-year Treasury yield has crossed 3%, 3.16%, I believe, as of yesterday. A year ago, that was 1.48%. So we're already approaching the high interest rate threshold that CBO has for interest on the debt to triple. Do you project that interest payments on the debt, the interest payment number that's impacted by the interest rate set by the Fed, will remain in a range of 2.4 to 3.8%, or do you believe that it will dramatically be above that?
We don't publish projections on on Treasury rates.
So as interest rates are moving,
camera angles are making it hard.
Appropriately so, to address the inflation environment that we're in. The Federal Reserve doesn't project the cost on the debt moving forward?
So internally, we don't publish, this is what I said, but internally we of course do have a path for the 10-year, for example, and for many, many years it's always showed rates returning to levels even where we are or even higher.
Well,
that's what goes.
Markets don't care about this; they're not moving.
Over time, for example, we're reversing. We're going to be shrinking our balance sheet by in the range of $1 trillion a year in coming years. So
it'll take 10 years for our $9 trillion balance sheet to be cleared up.
So we do.
Love you, Malk. No problem.
It's not our business to project this publicly, but that our assumptions are that rates will return to levels that are somewhat higher.
Well, let me, for the record, state that I'm very concerned that we're going to see interest rates remain high. The Committee for a Responsible Federal Budget notes that 50 basis points is $143 billion a year in debt. I'm concerned that we're on a path that's very unstable. Appreciate you being here. Madam Chairwoman, I'll yield back.
Thank you. The gentlewoman from New York, Ms. Ocasio-Cortez, is now recognized for 5 minutes.
Thank you so much.
Ooh, AOC, my second wife.
Thank you, Chairman, for coming in.
Gina, number one.
To speak with us today. Chair Powell, in the summer of 2019, which admittedly was a different world, during a Financial Services Committee hearing, you relayed to me that I would look at today's unemployment as well within the range of plausible estimates of what the natural rate of unemployment is.
Do a little legislating.
Do you recall what the unemployment rate was around that time in 2019?
We're going to turn up her resolution.
3.5%.
Yes, it was 3.5%. And what is the current unemployment rate today?
3.6%.
3.6. You also said, quote, when unemployment went way up, you didn't see inflation go way down. So you don't see inflation reacting to unemployment the way it does because inflation seems very anchored. Again, that was at that time. Chair Powell, would you say that some, briefly yes or no, but would you say that some of the contributing factors to today's inflation include ongoing supply chain issues, including volatility of commodity prices as a result of the ongoing conflict in Ukraine, and companies also raising prices because they can?
Well, I would say on supply side issues, for sure, those are playing an important role.
And am I correct that American workers' wage gains have actually trailed inflation? In other words, while the cost of goods went up by 8.6% on average, wages did not increase by that much.
It depends. For some people at the lower end of the spectrum actually have been getting positive real wage gains. For most people, though, inflation has been higher than their wage increases.
So on average, we have a wage growth at about 6.1%. So average wages are trailing inflation. It does seem that American workers are not primarily responsible for the inflationary issues that we're seeing today. But despite this, we are seeing some comments from individuals like former U.S. Treasury Secretary Lawrence Summers earlier this year said that in order to contain inflation, the U.S. needs 5 years of unemployment above 5% or 1 year of 10% unemployment. Do you agree with that assessment?
So I understand how that number can be arrived at or derived, but I think there's so much uncertainty, and in particular, the answer is going to depend to a significant extent on what happens on the supply side. If we do get these supply side problems worked out, which I think is certainly going to happen in time, then you wouldn't see anything like that. But it's a highly uncertain time, and our intention, of course, is to bring down inflation while keeping the labor market strong.
I think it's important to drive home what a 10% sustained unemployment would look like in this country. For context, we didn't even reach 10% during the Great Recession. We did experience 10% unemployment in 1982 following the Volcker shock. But in this market, to get to 10% unemployment, that would require about 10.5 million additional people out of work. And historically, we know that Black unemployment is usually double that of white unemployment, correct?
Yes, it tends to move at twice the speed, both up and down, but certainly moving up.
So when the former Treasury Secretary says he wants 10% unemployment overall, he's also saying that we need Black unemployment of nearly 20%, or implies that. But Chair Powell, I do think that despite the tools that you don't have, Congress does have tools as well. Would you say that the following actions granted in the scope of Congress could be deployed to impact inflation, using antitrust laws against companies that are raising prices using their market power?
Sorry, I didn't hear the last part.
Would this action, would using antitrust laws against companies that are raising their prices have an impact on inflation? Laws? Antitrust?
Antitrust laws. Okay.
He's having a really hard time hearing people.
No worries.
Incredibly.
No worries. Would that have an inflationary impact?
It's hard to say, really.
Would subjecting those companies to a windfall profits tax have a potential impact on inflation?
Again, I don't.
Yep. Can't ask about policy.
Would requiring government contractors to keep a lid on their pricing have certain impacts on inflation?
You know, there's a long history of price controls when inflation's been high, and it was not a successful one. Really, it comes down to getting demand and supply in alignment.
And if the Fed's tools mostly impact demand, but most of those inflationary issues could be potentially impacted by supply, how high do you think the Fed would actually have to drive unemployment to actually have an impact?
Well, that's going to depend on a lot of things, and you know, ideally we can raise rates, and it's very important that we get inflation back down, particularly for people at the margins of society who are suffering the most from inflation, and maybe a longer conversation we can have.
Thank you.
Thanks.
Thank you very much. The gentleman from South Carolina, Mr. Timmons, is now recognized for 5 minutes.
Thank you, Madam Chair, and thank you, Chairman Powell, for being with us today. Congratulations on being confirmed to your second term as chair. We got some rocky times ahead. Wish you luck. Last time you were here, we discussed how rising interest rates really inflates debt servicing costs for the federal government. And I know what you're going to say. That's a concern for fiscal policymakers, the Congress, to take into account.
I know you're going to say that, but I'm going to ask anyway.
But I still think it's worth everyone being fully aware of just how costly servicing our debt will be now that interest rates are returning to historically normal levels. According to the CBO, interest payments on debt are the fastest growing part of the federal budget. CBO projects that servicing our debt will cost taxpayers $8.1 trillion of the 10-year budget window.
Thank you. Appreciate you.
And their inflation assumptions
Recognized and ignored.
projected interest rates are fairly lower than current levels and quite a bit lower than where rates are likely headed to get inflation under control. And I thank you for your efforts to get inflation under control, but for every half percentage point rate hike, that is an estimated $133 billion of annual increases. I'm going to say that again, $133 billion in annual increase in debt servicing costs. That is just a staggering amount of money. So we, Congress, must get our fiscal house in order. We have to. There is no other option. The dollar's position in the world as the global reserve currency is solid, and there are no immediate signs of that changing. But if we continue on our current trajectory, that will not always be a given. So my question is, are you worried that if our current fiscal path continues, which I should note with each rate hike it looks worse and worse, that the dollar's position in the world could be challenged in the long term? Is that a concern?
Certainly in the long term. The dollar is the reserve currency, and I don't see it as particularly under threat at the moment, given the advantages that we have, which are many. But you're right, the U.S. federal budget is on an unsustainable path, and we will have to deal with it. The sooner the better. And unsustainable just means that the debt is growing faster than the economy, which by definition, over time, can't be sustained.
Thank you. For the record, I also want to follow up. You stated the following as Congress considered the Biden stimulus. Quote, in addition, workers and households who struggle to find their place in the post-pandemic economy are likely to need continued support. The same is true for many small businesses that are likely to prosper again once the pandemic is behind us. That was from your speech on February 10th of 2021. I just wanted to add that in for the record. One final question. During a meeting last week at the International Association of Insurance Supervisors, the IAIS issued a consultation paper on comparability criteria looking at the use of international capital standard versus the aggregation method. As you know, the U.S. has committed to using an aggregation-like approach here in the U.S. through the National Association of Insurance Commissioners Group capita calculation and the Fed's proposed building block approach. Moreover, the EU and the UK, through their covered agreements with the US, recognize these approaches to group capital. Nevertheless, Insurance Europe, a federation of European insurers representing more than 95% of the European market, takes the view that there cannot be two versions of an international capital standard. So my question to you is this: will you continue to advocate and support the aggregation method as an alternative to the international capital standard?
So I think I'm a little rusty on that, but I will say this. I know that we're strongly committed to capital standards that work for U.S. insurance companies.
I get that, but I guess what I'm getting at is we have a different way of regulating insurance here in the U.S. We all know that, and it works for us, and we do not need to let these international bodies change our way of doing things. We need you to stand up for the American way.
I'm not going to lie. I don't know about you guys, but I'm bored as hell. This has been like 2 hours, 3 hours. We started at 9:30. 2 hours of this. They just keep asking the same gibberish that like the Fed isn't going to answer. I would like to believe that they're aware of that, but it seems like they're not. I don't know. Let's see how long we hold off.
Way of doing things, and for
either way, make sure you've liked and subscribed. They're normally much more fun. This one's really bad. Normally they're more fun. Make sure you're in the Discord too. Make sure you follow me on Twitter, like and subscribe. We're live here all the time, usually doing more TA, less boring. Next time we're definitely doing a drinking game. Every time they say chirp pow, we're taking a drink. Check out our sponsors. Let's see how long we last.
For American businesses, can you commit to doing that?
So I think that's what we're doing. So
okay.
Yes.
Thank you, Madam Chair. I yield back.
Thank you. The gentleman from Massachusetts, Mr. Auchincloss, is now recognized for 5 minutes.
Thank you, Madam Chair.
It's always on the record. Ooh, why am I up here?
Welcome, Chairman, I want to start by asking you about inflation expectations, which, as you obviously well know, can be very difficult to dislodge once they are anchored in the mindset of consumers, and what the Fed can do both to address inflation, but also to convince Americans that inflation is going to be lowering in the medium term and thereby prevent inflation expectations from getting anchored.
Well, so if you look at inflation expectations, and of course we measure professional forecasters, households, market-based break-evens and things like that, a broad range of things. You
I have a position open, it's just not moving.
People expect inflation to be high in the very near term, but they expect it to come down fairly quickly and get back to. So
Sold all my crypto for ramen.
As a general matter, the evidence is clear that people do expect inflation to come back down to levels that are consistent with our price stability mandate. But this is the first, we haven't had a test like this. I would say we haven't had an extended period of high inflation for a long time, and so it's not a comfortable place to be. Short-term inflation expectations are higher, and it does add, it adds to our desire to move expeditiously and with force to get rates up and ultimately to get inflation down.
So, building on that, 1 degree removed, the only thing more painful than expected
high
inflation is unexpected high inflation, and it makes it the degree to which businesses and consumers do not have confidence in the Fed's ability to control inflation, or the U.S. government at large, makes it harder for them to make capital investments in the long term, makes it harder to do wage negotiations. Is there a measure of the degree of confidence that both business and consumers have in the ability of inflation to remain low that you are tracking, so that we can try to measure the degree of confidence people have in not having to see unexpected inflation in the future?
So first, I agree. But ultimately, this is the point is that if the public retains confidence that inflation will come down, if their expectations remain anchored, then it will come down. That is we think that's how
self-fulfilling.
I actually have a serious thought here for a second. I actually do have the answer. So they're struggling to find the answer if they have the tools. There's one angle no one's thought of yet. So the issue is that the Fed has set a 2% inflation target. That inflation target has been smashed over the last few months. Smashed. 8.6%. Easy fix. Let's just make the inflation target 10%. Smooth sailing. Tom for president.
Right. So by many, many measures, we track them all. I mean, we put them all in one big measure called the Index of Common Inflation Expectations. We do that, and we publish that at various times. And they're sending basically that message that essentially, yes, inflation expectations are anchored. But as I said, that's good, but it's not enough. We need to get inflation down because inevitably over time, these expectations are going to be under pressure.
Are you able to track, though, it seems like you also want to track volatility within that index of inflation expectations to see how much confidence people have that they're not going to see unexpected inflation?
Yes. We look at the distribution, and there's some small signs, concerning signs, and we just can't allow that. We really have to. Ultimately, our whole framework is about keeping inflation expectations well and truly anchored, so that inflation will return to that anchor.
And your credibility in that is autocatalytic in
autocatalytic.
So I think it's critical that the businesses and consumers have that confidence.
Absolutely.
Can you explain how quantitative tightening, I guess we would call it now, is going to play into that? Unrolling quantitative easing of the last 10 years?
This might be
it's quantitative
real question.
Easing in reverse. So what quantitative easing does is it reduces the supply of risk-free, longer-term assets.
Trav and
that
Tom,
tends to
baby.
drive rates down as people want those. And when we loosen our balance sheet, when we shrink our balance sheet, what happens is the public will be holding more of that paper and we won't be holding it, and that should have some upward pressure over time. Markets are forward-looking, so they're already pricing this in.
And you don't project any changes in how you're going to do QT?
So we put out a plan. We thought very carefully about it. We've announced it. Markets have seen it, and it's sort of priced in. And I think we would intend to keep to that plan. Of course, one of our principles is that we're always going to be flexible.
We need Gina
if that's warranted.
There's no
Last
Gina
question
here.
for you in the last
Worst
30
meeting
seconds, Mr.
ever.
Chairman. Can you give us an update on FedNow and your plans for access both to established banks as well as to financial technology companies?
So FedNow is supposed to go live next year. We believe we're on track to do that. We've got people working really hard on it for some time. I didn't catch the last part of the question.
And how are you gonna make access available? Is it gonna be just for certain types of banks? Is it gonna be for financial technology companies? How are you gonna adjudicate access?
So that's something we're looking at. We are, I mean, mainly it's for the broad sweep of banks, and we'll have to look at going beyond that.
I yield back.
15
The
minutes.
gentleman from South Carolina.
Thoughts on
Mr.
CBDC,
Norman,
inevitable.
is now recognized for 5 minutes.
Travis,
Thank
it's
you,
amazing.
Chairwoman Waters. Chairman, welcome. Glad to have you here. Would you agree that housing is a leading economic indicator on the health of the economy?
We looked at Solana. It's not doing anything.
Or
Or people
on
keep
the
asking.
direction the economy is
It's not doing
going?
anything.
It's certainly an important indicator.
Because it affects so many different facets of the economy. Because it affects so many facets of the economy. Is that right?
I'm sorry, I'm having a hard time hearing.
I'm sorry?
Because it affects
What?
so many facets of the economy. In other words, when you housing, whether it's commercial or residential, you buy a
This is
lot of
cracking me
products that are across the spectrum.
It's an important, very important sector of the economy for the reasons you point out.
And one of the reasons that most economists are predicting a severe recession is housing as a leading economic indicator. I've done that. That's what I've made my living. Do you realize it's very simple to solve to get the housing at a point that it was under
Do you
the previous
realize?
administration? I'm
Do you
from South Carolina.
realize
People are moving there. Do you realize
how
in the
easy it
last,
is? I could do your job right now.
Probably 4 months.
Sure, guy.
It's been a severe cutback, despite the fact that people are coming in and need it. And it's because of this administration's war on energy and natural gas.
That's why there's no houses,
The
because
Fed
the other
can't
party.
regulate that. Putin can't regulate that. It's a direct result of policies of this administration. And one of the reasons that it's
That was some
basically
word
going to come to
salad.
a standstill, the war on energy, you can't afford gas for your product. It's a war on the workforce that this administration has done. When you pay people not to work, it's kind of an
That's all,
disincentive to go
folks.
to work.
Yeah, this hearing is garbage.
Supply chain that has been mentioned. When the call I got 4 days ago, a leading producer of chicken cannot get corn to feed the poults, the young chicken.
This is a
kind of problem.
garbage hearing.
Interest rates, which is
Sorry, fam.
at your disposal, is severely going to affect the housing industry. When you're paying a 6% long-term mortgage rate, along with every other cost increase directly caused by the policies of this administration, the housing is going to come to a stopping point.
Stop just blaming people. Solutions.
As it is.
That's why our government sucks.
Now likely to have. Regulations have been mentioned here.
You should be playing bingo.
Based on simple projects, regulations, and I would point out many of them needless to be 35, 38%. That's when you combine all of these things, housing is going to take a tremendous drop. That will affect the economy, wouldn't you say?
I think all of those things are affecting the economy.
Next question.
Greed that has been mentioned here a leading cause of inflation?
Oh my God, shut up.
I think it's a macroeconomic phenomenon that's caused by the.
I love Powell, dude. So much respect for him,
Was
actually.
greed not a factor 4 years ago?
The fuck are you talking
I mean, if it's a factor
He's just
now,
face
were they just less greedy in 16 through 20?
It's hard to see why there would have been.
Right. And did Putin, was he responsible for the low gas prices
Oh, my God.
that we experienced from 16 and 20?
Not as far as I know.
I don't think he had much.
He is
impact.
so
If he did,
trolled.
It'd be a sad state for the United States. You know, I think one of the comments I mentioned about the debt relief for college students that's been proposed by the current administration. How will that have an effect on the economy. And
They clearly didn't. They clearly didn't listen to anyone else's questions because they just keep asking the same questions, and Powell just keeps uncomfortably sitting there, being like, "That's a policy decision."
It's been talked about to forgive $50,000 per student. Will that affect the inflation and the economy?
You know, as I mentioned, we don't score these bills from an inflation standpoint.
It wouldn't be positive, though, would it?
Sorry?
I doubt it would be positive, would it?
Well, I don't know. I mean, that's for elected
Shut
folks.
up,
All right,
dude.
and on the central bank digital currency, would you have to have approval from Congress before the Federal Reserve got involved?
That guy invested in Luna.
I can't imagine that we would move forward without authorizing legislation.
So you'd have to have the approval of Congress.
Yes.
Well, thank you for what you're doing. You're using the tools that you have at your disposal. Most of this can be eliminated if we had a policy now that was pro-business, pro-growth. But thank you for what you're doing, and congratulations on being reappointed as chairman.
Thanks for wasting our time with questions that had been asked already in this exact meeting.
Is now recognized for 5 minutes.
Thank you I'm over here, Mr. Chairman. Thank you very much, Madam Chair and Ranking Member. Mr. Chairman, thank you very much for being here, and congratulations, I think.
Dollar
I'm not
broke.
sure. You're running into pretty heavy lift here going forward, but very much I appreciate you being
Thank
here
you
today.
all for being. No, screw that guy. Thank you guys for being here today.
I believe that inflation is real, obviously, and it's hurting a lot of people.
I believe it. This guy is a philosopher.
It's the causes, I think, that are being manipulated and frankly lied about. And there's one big criticism that I make of you, and also, and especially, I guess, Secretary Yeltsin, and that is that you haven't explained inflation within the context of the world environment, what's happening globally. My good friends on the other side of the aisle love to blame inflation singularly on President Biden and his policies. I didn't get a chance to ask Secretary Yellen any questions when she was here last time, kind of low on the totem pole here. But I wanted to scream because every time she led with her chin as opposed to explaining that this inflation is globally. But now that I have you here, I get to ask you some questions. What is the inflation rate in the European Union?
Overall, I wouldn't.
I'll allow it.
It's 8.8% according to Statistica.
Why are you asking?
Did they receive any money from the American Rescue Plan?
Not to my knowledge.
What is the inflation rate in Estonia?
In Estonia, don't know. I mean, they're roughly comparable to ours.
It's 20.1%. It's not very comparable to ours. It's over 3 times higher than ours.
What is
Estonia? Did they receive any money from the American Rescue Plan?
Not to my knowledge.
How about Latvia? What is the inflation rate in Latvia?
Oh my God, this guy sucks.
It's 16.8%. Did they receive any money from Biden?
Every asset class under
Next
the
guy.
SEC, the
That's what happens when you
Securities
pause it
Exchange
enough.
Commission's jurisdiction. The sheer complexity and volume of these overlapping rulemakings could negatively impact markets and the public that depends on them. SEC Commissioner Hester Peirce, I should say, warned that the speed and character of these rulemakings could create dangerous conditions in our capital markets. Now, this is against a backdrop of the U.S. economy facing significant challenges. We've discussed that all morning. Inflation at more than a 40-year high with substantial increases in the cost of food, housing, and gas prices at record prices. Also, supply chain backlogs and labor shortages continue to weigh on the economy with consumer and business confidence plummeting. And of course, we're still studying the impact of the global pandemic and the consequences of the ongoing Russian invasion of the Ukraine. In Oklahoma, small businesses, farmers, ranchers are navigating through surging energy prices and volatile agricultural markets for inputs like grain and fertilizer. Poor crop conditions and high commodity prices are expected to worsen the situations throughout the.
My bad.
Uncertain times like this, market participants need to seek to protect their retirement savings, to hedge risk, and to safeguard their livelihoods. A top priority should be supporting liquid markets to to protect the U.S. economy from the face of these substantial headwinds? I know you don't comment on other entities within the federal government.
But I'm going to ask you about them
I know these
anyway.
regulations that are going to have such a tremendous impact are not coming from your area, but unfortunately I'm concerned that the magnitude and the significance of rule-making proposals coming out of the SEC in such a short amount of time runs counter to the goal. We know that regulatory uncertainty creates adverse market environment for economic growth and market stability. So Chairman Powell, I'll not ask you to comment on the SEC, but could you speak to the importance of market liquidity during periods of economic uncertainty?
Cool question. Finally, a good
So
one.
markets are there to, one of the things they do is process information and consider the implications of it. And it's critical that markets be liquid enough to do that. And if that happens, then financial conditions can adjust and equity prices of various kinds can adjust. And that's one of their big functions, is to do that and to absorb news, sometimes very difficult news, in a way that preserves stability.
I think Congress and the public should have the opportunity to fully grasp the impact of the SEC sweeping proposals. If we really want to tame inflation, we should begin by not making the current situation worse. The SEC's approach will rattle markets during a time when strong capital markets are essential to our economic growth and our constituents back home. After all, you're working hard on the demand side of the equation, but we in Congress and the administration should help with the supply side of the equation. And that is not making it more difficult to invest in and create more goods and services in this country. That said, Chairman Powell, as you've acknowledged, the Fed's monetary policy tools can do very little to mitigate rising gas prices. However, the increased cost of gas has an oversized impact on consumer inflation expectations. Folks see the price at the pump going up and experience the price per gallon at an all-time high. Could you discuss how the Fed envisions its ability to rein in inflation expectations, driven in large part by gas prices? Or put another way, if gas prices remain at record levels, is an aggressive response from the Fed all but guaranteed?
Well, if gas prices remain at the current levels they're at, then inflation, the problem is inflation means continuing to go up. So it isn't so much the level as the rate of change, as you know. So
the delta.
I think we are mindful that even though these things are outside of our control, the gas
dollar
prices
rallying,
and food
BTC
prices
dumping.
for the most part, that adds a little bit of urgency in our wanting to get our rates into a place where we're addressing inflation directly, because the public reacts to all kinds of inflation, not just core inflation. Our tools generally go to core inflation. So, we don't think we can use our tools to change energy prices, but we do think that they add to our desire to get expeditiously to the appropriate levels.
And clearly, Congress and the administration, the majority, has a responsibility to increase supplies of resources, not discourage that. Yield back, Madam Chair. Thank you, Mr. Chairman.
Gentleman's time has expired. The gentlewoman from Ohio, Ms. Beatty, who is also the chair of the Subcommittee on Diversity and Inclusion, is now recognized for 5 minutes.
Thank you so much, Madam Chair, and thank you, Chair Powell, for being here as you're navigating through all these federal issues during this difficult economic time. Chair Powell, after our hearing concludes, this committee will be voting on a few pieces of legislation, so I'm going to take advantage of having you here to shed some light on a few of the things that we will be considering.
Oh, no.
I can't think of a better person to give us some insight
Literally
on these issues.
No one has listened to the other questions.
First question is, we'll be voting on an amendment that would delay the SEC's small business advocate from conducting outreach to underserved business owners until after gas prices drop to the pre-COVID level. Chair Powell, in your opinion, will delaying the SEC's outreach to minority business owners affect gas prices in any way?
With all respect, I'm reluctant.
As soon as she said, "You're the best person to ask about these policy decisions we just made," you immediately knew he couldn't answer.
Comment on proposed legislation.
Well, let
No-
me ask
no
you this.
further
Let's say
questions.
if it's not legislation, is there a correlation
What if it wasn't?
between what gas prices would be in relation to what they were with pre-COVID with inflation?
Again, I'd be expressing an opinion on
Yeah, but Chair Powell, what if it wasn't?
someone's
Then what?
amendment, and if I start down that road, I don't know where it stops. I really, these are matters for elected people.
Well, would you say that the global markets and inflation is across the country, that we're seeing this everywhere?
Yes, inflation is happening everywhere.
They
now.
literally don't.
I'm dealing with a lot of fair housing issues in my district. And, I have a long history of working with public housing and relocating people. And as we look at issues with housing, do you think housing is any way tied to inflation?
I'm sorry, I didn't catch the question. I apologize.
Do you think what's happening in our housing market is tied to inflation in any way?
Yes, it is. Yes. So housing costs are about a third of the CPI. Housing, we call them housing services, and that's really rents plus the way it works is in effect an owner of a house is charging something called owner's equivalent rent, or paying something called owner's equivalent rent. So yes, it's an important factor in inflation.
Okay. So can you tell us, in your opinion, in light of Congressman Vargas's question, as he was giving us an idea of, as some of our colleagues are trying to tie things to the American Rescue Plan, they're trying to tie it to us taking care of the least of us, that if it is tied to inflation, why in other areas or countries and they don't have the American Rescue Plan? And how do you answer more about Mr. Vargas's question? I mean, I know he gave you a litany. I'm not trying to put you on the spot with quizzing you on what their inflation rate is in comparison to ours, but I think you got where he was going with this. Is there anything else you'd like to elaborate on in relationship to where he was going?
Sure.
What's the inflation rate on the International Space
There
Station?
are differences between, even though we have a very similar inflation rate with a lot of the large European democracies now pretty close, there are differences between countries. And the difference with the U.S. Compared to the European countries is that ours is more about demand. We have areas in our economy where demand is substantially in excess of supply. That's not mainly a feature of the European economies, where they're really feeling very, very high inflation because of energy prices and also food prices now. That's part of our story too. We're also feeling energy and food prices, but we have this other part that is more core inflation, that is more susceptible to being managed by our tools and is really the object of our tools.
My time is already up, but in light of your response to my first question,
All right, screw these people. Charles Hoskinson, also speaking, I guess at a different Congress.
Of interfacing with those marketplaces, different way of handling identity and compliance.
I only have a minute, so if I can jump in here. The fact that you're talking about big tech, I think, is very interesting in this, because you also mentioned that one of the features of regulation is that we can use algorithms now. Yet we've seen them use algorithms to limit people's freedom of speech and to do all these other nefarious things. So if we give the government that power, especially as the Federal Reserve is looking toward creating a digital currency potentially, and we already have banks being thrust upon them to enforce ESG scores. And in China, we see where those ESG scores suddenly become personal scores on individuals. It's not a far step technologically, and in the way we see some of the agencies working right now to begin to target those algorithms toward people and their personal habits and their spending. So how do we compete economically on the world stage without threatening the privacy rights of Americans?
I have a feeling this is going to be a lot better conversation
going forward, because this is a very dangerous slope if not handled correctly.
Yeah, I couldn't agree more. I'm deeply concerned by social credit, deeply concerned by some of the proposals for CBDCs, because you can have transactional discrimination against any ethnic group you want or any political philosophy you want. So the point is the algorithms ought to be built out in an open source process, transparent and available to all, and people have to have the ability to opt in instead of opt out. So the power of our industry is we didn't have a government agency or some central actor say, oh, here's cryptocurrencies. It was the tireless work of millions of people, many of which never met each other, around the world, coming together voluntarily and building a new economy worth trillions of dollars. That's the way we ought to think about it, not how do we create some government agency or how do we create some central bank or central algorithm that'll control everything. And then you ask yourself about the outcomes you desire. So it's clear that there's been some problems over the last 13 years, and we're working our way through that. But at the same time, we have created value for millions of people, and we shouldn't lose that sight.
You want to elaborate on the lemonade? Chair Powell elaborates on the lemonade.
Gentleman's time has expired. Thank the gentleman. Concludes our initial round of questions. Seeing no other members in the room, I want to extend an opportunity for a selective round of additional questions. If the ranking member has anything, I'm happy to yield to her.
I have a question. Would you elaborate on the lemonade?
If we're prepared to, and I don't see any others, but I just wanted to express another thank you to everybody, because this has been an incredible informational kind of meeting that we've been able to have. And I have, again, thanked the chair for bringing us together, but thank you to all of the witnesses.
Well, I thank the gentleman, and I take it that's also your closing remarks. Appreciate that. Thank you to all of today's witnesses. I want to be respectful of your time. Let me just say in closing, given this committee's jurisdiction over the Commodity Futures Trading Commission, market volatility and continued growth of this industry, it's important we remain active and engaged as a participant and have these conversations to consider and determine appropriate and necessary legislation and regulation in this industry. As you know, since Bitcoin was released in 2009, the digital asset market has experienced explosive growth, innovation, and evolution. And the testimony we've heard today certainly highlights those market evolutions and indicate that that'll be a key characteristic of the digital asset industry for the foreseeable future. And of course, as recent developments have shown, we also understand the volatility of these markets and the risks that come with that. The potential solutions this technology can offer are worthy of a regulatory regime that will allow for continued innovation while also establishing and requiring platforms adhere to a uniform set of standards and guidelines, and will protect those that choose to participate. While there are many more conversations to be had, I'm certainly glad that our committee is remaining active in this discussion regarding the future of the digital asset regulation. Also, would want to stress the importance we all put on the United States having a leadership role in this space. I'd like to thank the committee chairman, Mr. Scott, for the opportunity to chair the subcommittee. I'm also very proud to take this leadership role at this critical time. I look forward to conducting additional hearings. We're just getting started. And of course, would be eager to hear additional relevant testimony here at the Commodity Exchanges Energy Credit Subcommittee. I want to thank the ranking member, Ms. Fischbach, for joining me today. I want to thank particularly our witness in Asia for getting up late. And with that, the committee stands adjourned. Excuse me, I have to do one other piece of housekeeping, I believe, which is to tell you that under the rules of the committee, the record of today's hearing will remain open for 10 calendar days to receive additional material and supplementary written responses from the witnesses to any questions posed by a member. And with that, this hearing of the Subcommittee on Commodity Exchanges, Energy and Credit is adjourned.
Wow. Sorry, guys. Usually, these meetings are a lot of fun. I try to make them fun. We make them fun. But wow, that one was not. That was truly boring. We talk about nothing burgers. That was like the king of nothing burgers. What an embarrassing show of elected U.S. politicians. Straight up embarrassing. I think the big takeaway that maybe we can all rejoice in is we just spent like 2 hours watching Essentially, politicians point fingers across the aisle, but one topic shone through, and that topic was cryptocurrency. That was the single thing that was talked about that was not bipartisan. It was bipartisan. It wasn't a finger pointing. I think it was brought up by both aisles, and it was the only question of substance. And we're talking about the Fed chairman, Powell, Chair Powell, talking to the House, talking to some of the most powerful people in America. And the only questions of substance were about cryptocurrency. What does that say to you? For those of you who are new in the space, maybe that doesn't sound, I don't know, that exciting. But I know Rico, all the other OGs out here, everyone that's been in the space a long time, that is unreal. To even hear government, when they first even said the word cryptocurrency or Bitcoin, was weird. But now to see it as the single topic of substance at what was supposed to be an incredibly important meeting, wasn't really, but was supposed to be. That says something. Quick recap, markets, dollar is up a little bit off of that Powell. I don't know why anything would be moving based on it. It was not full of anything. It's up a little bit, but okay. Really just back to yesterday's open. Would be a solid close for the dollar here today. We'll see what happens. Bitcoin from the Chair Powell is relatively where it was, down a little bit. On the day, we're going to be looking for a close above 20,700 to set up another bullish engulfing candle. Closing below may show signs of weakness from the bears, or from the bulls, not the bears, the bulls. This is what I was pointing out. I didn't talk about it much because we were listening. This is what I'm watching right now. This is what I think everyone would do well to watch as well today. We have a very important price level, and that's 19,900, the previous all-time high. We've seen it act as support if we're down here on the 5-minute multiple times, many tests. But importantly, we have two real tests that are going to show through on higher time frames. So if we look at this chart, what we can see is not a good pattern. A return again to 19.9 and a break gives us a head and shoulders pattern. Not exactly what we want to see. Not exactly what we want to see after hitting 17K. Paying out at head and shoulders and fall now. The measured move on that, measured move here, I have it marked. I guess I don't have the price label. Measured move on that head and shoulders would be looking around 18K. That's really not that bad considering we've traded lower, but that head and shoulders pattern is making the probability of this happen higher. However, it has not played out yet. So we need to see this to play out. One, we absolutely need to break 19.9. Period. You don't break 19.9, then this isn't a head and shoulders. It's just something else. I don't know. On a break of 19.9, what we may expect to see is a sell-off that gets bought up back to 19.9, where we find it as resistance, and we see the sell-off to 18K. So what am I doing? I'm in a long right now. Here you go. These are my levels. You can't see it super well. I don't know why. Something got goofed up with this, but you can't see it super well. But I'm long right now from 19.9. I've taken a little bit of profit up here at 20,500, 20,007. I placed it very close back down here, but I have a stop loss in profit at just under 20,100. This trade's a little irrational. It's a little irrational, but whatever. If we see 19.9 break, here's my plan. I'm going to watch, see where it goes to. I'm going to wait for that retrace. Going to watch for 19K. On a back test of 19K, I'm going to look to enter a short position with low leverage with a stop above the right shoulder's high. That'll be 20,800. I'm going to look to play that down. 18K, maybe lower. We'll see what happens. The future is unknown, but we'll find out. I appreciate you guys for being here. I'm sorry that sucked. The next one will be better. We'll play our Chair Powell drinking game, I think. If you haven't liked and subscribed to the channel, please do so. Jump in the Discord. We're going to do a live airdrop. You'll get some free Satoshis just from being in there. And it's the best way to keep up with the live streams. Follow me on Twitter. Check out our sponsors, Market Cypher and Femex. Market Cypher is my favorite trading tool. It is a top tier premium trading tool. Use promo code CROWN if you decide to pull the trigger on that. You'll get 15% off. Femex is an extremely classy exchange. I trust them as far as I can trust any exchange. I've used them for years. You see me trading on them here. They have negative maker orders for derivatives, meaning when you open a position, if it is a limit order and it gets filled, you'll actually get paid to open that position instead of paying a fee. If you're market ordering, you'll be paying a fee. But I really appreciate them. They have leverage, spot. They have an crypto earn program. Looks like they're offering 8.8% on USDC right now. These are pretty low. However, they're not the same as the lend platforms. These people are lending on the exchange to people who are using them in positions. The risk profile is very different. So check out Femex. Check out the links in the video description below. Jump in the Discord. Make sure you're subscribed. And we'll be live again tomorrow. Same thing we do every night, Pinky. Try to take over